Hello, and welcome to a public forum of the Governmental Accounting Standards Board. Today's July 13th, 2026. It's great to have everybody here with us. This is the second in our series of 3 public forums on our exposure draft of a proposed statement on infrastructure assets. We have a very distinguished group that has agreed to come and talk about their views on the infrastructure asset project. For many of you, we have your comment letters, but it's great to be able to hear discussion, further elaboration on things that you might have in your comment letters and or discussion amongst yourselves about the topics at hand here. I know this is a very distinguished group. I know you guys have plenty of things to do with your time. We're very grateful that you are sharing some of your time and expertise with us on this important project. So thank you very much for the time you've put into preparing for today's roundtable as well as our forum, as well as the time to participate in it. So thank you for that. Joe Wickland is our project lead on this, and I'm going to turn it over to him in just a minute. But first, thought we'd go around and introduce ourselves so that everybody kind of knows who all is in the forum here with us. I'm going to go through the participants first, and I'll call on you and turn it over to you to introduce yourself and kind of your perspective, organization, whatever you'd like to say about what you do. And I'm going to go in alphabetical order by last name. I think I have the list in that order, and that starts with Bill.
Bill Blend. I am participating today as a private citizen. However, I'll just give you my background. I have about 30 years in public accounting, principally as an auditor. Briefly spent some time on the other side of the fence working for a county government in the state of Florida. I've worked for all different size or audited and consulted with all different size entities in the government sector, from very small municipalities to very large counties to some of the top 10 school districts in the country, large BTAs, and so on. And so I really hope to bring today my personal vantage point as well as discussions that I've had with folks that work at those entities. Thank you.
Thanks, Bill. Rich. You're on mute, Rich.
Sorry about that. Good afternoon. My background has been extensive in the municipal finance field. I've been in the business 48 years, primarily associated with the municipal bond community. I served initially as a research analyst and later as manager of research as well as fixed income, so as an investor as well. I have also had experience as an elected official about 25 years ago. I spent that with a city of 20,000 population here in Illinois. And one of my major campaign issues was on our neglected infrastructure, which turned out to be quite true. So we could go over that. But so I've had an interest in the subject. The subject itself has been an interest of mine almost since the beginning of my career. One of my very first presentations was related to capital assets. When the late 70s, you might remember academics, public policy officials were starting to take a intensive look at capital assets, and led to the early 1980s book, Capital American Ruins. So this is a long-standing issue of mine. And then finally, I've been a board member of the Civic Federation of Chicago. So as a taxpayer watchdog group, we had to spend a lot of time on this. I chaired the pension committee and watched over the years how the accounting rules and OPEB rules changed in that area and participated in the discussion. I should have mentioned also, as well as being on the municipal bond buy side and sell side, I also have had a long association with a company that was started while I was at a mutual fund company. That's the Municipal Bond Credit Database. We started in the 1980s. And today we have over 70 to 80% of the institutional municipal bond market receives our credit data, in which we do our best to always be in compliant with GASB and FASB. We look to those issues. We have accountants on our team to go through that. You might say we are the intermediary in extracting the financials that many investors see on their desks, which is important because we have a really strong detailed interest in these documents. So a rather long one, but hopefully that would be helpful to you.
Thanks, Rich. Kind of buried the lead there at the end, but you can, yeah. It's a widely used tool that you participate in preparing, lead preparing. All right, Jody.
Hi, I'm Jody Doherty. I'm an audit partner with Ida Bailey, and today I'm here representing the AICPA State and Local Government Expert Panel.
Thanks, Jody. David.
David Drain with the Pew Charitable Trust State Fiscal Policy Project. And our work has in particular covered long-term liabilities, pensions, OPEBs, and as we'd argue, deferred maintenance liabilities for infrastructure.
Thanks, David. Lisa Marie.
Good morning, Lisa Marie Harris, and I'm the CFO of the San Diego County Water Authority. We're one of the largest wholesale water agencies that deliver water to the region of San Diego. I have 22 smaller agencies that I support and deliver water to. And our primary objective is to deliver safe and reliable water to the region, and we do so with massive amounts of man-made infrastructure. We have the largest desal plant in the Western Hemisphere. We've raised the largest dam in the Western Hemisphere. We've maintained 300 miles of pipe to access the Colorado River. We've lined canals, we've raised dams, we've built reservoirs. Also, we can make sure we have safe and reliable water. And so a large part of the work that we do is managing and maintaining our assets. And that's a large part of the work we do. So we're very interested in this work. And we're also interested in how it can impact my smaller agencies. We do manage the infrastructure for the region, but we also provide assistance in managing infrastructure for the 22 water agencies that I support. And so we're certainly, I wasn't able to meet the deadline, but we are concerned about how it can impact my smaller agencies and whether, based on the timeline, if they can be in compliance. So I certainly am interested in engaging on that topic. And I have 30 years of public finance experience, and I'm very much interested or have background in public finance, also financial statements, et cetera. And we're actually about to go to market for about $700 million in the fall, again, for maintaining our infrastructure. But I'm happy to share more later. Thank you.
Thank you. And we look forward to your participating here today. Certainly the deadline's passed, but if you have a comment letter that you'd like to prepare after today, happy to still take that into account. So not necessarily too late. We'll take input as long as we can get it. Thank you for being here. Sean.
I'm currently the senior manager, controller, and auditor at Snohomish County Public Utility District. We're the 12th largest public power utility in the U.S. I also have about 20 years director experience at American Public Power Association as their representative to GASB, and interested in providing feedback to this group based on the input from APPA. Thank you, Joel.
Thanks, Sean. Gary.
Good morning and afternoon from Utah. My name is Gary Podgers. I work for the Department of Transportation here in Utah. My primary work applications have to do with reporting on GASB and our infrastructure. Talk about a dignified group here. I've only been at it for 7 years now. I'm just making sure that we are in compliance, and being the smallest brain in the room, I'm just going to sit in the corner with my mouth shut and learn. But maybe every once in a while I can ask a question that might seem reasonable. Thank you for having me, by the way.
Thanks, Gary. We'll try to get as much out of you as we can. Appreciate you being here. Stacy.
All right. Good morning. I'm Stacy Tellers. I am the local government support manager at the Washington State Auditor's Office. I've been doing accounting for over 25 years, and 16 of those years in government, and 8 of those years was a preparer of the ACFR for one of our mid-sized cities in the state. I'm super thankful to be here. We are required by state law to prescribe accounting and reporting for our local governments. And our GAAP governments, they follow GASB. We try to align our cash basis reporting as much as we can. And we have about 2,000 local governments that we have to just know everything about accounting and reporting about. So thankful that I'm here to participate.
Stacy. Cameron.
Hello, excuse me. My name is Cameron Vanoy, and I'm joining today from Austin, Texas. I work in the Travis County Auditor's Office, but I am actually here today representing the GFOA AFRC committee. I'm the chair of that committee, and so I will be representing the GFOA. And perhaps I have a few comments for me personally from Travis County as a provider, but mostly we'll be commenting on GFOA aspects of this ED.
Thanks, Cameron, and thanks again to all of you for spending the afternoon or morning, depending where you are with us. For the GASB, it's not necessarily alphabetical, but it's the kind of list that Greta gave me. So I'm just going to go through it. It starts with me, and I am Joel Black. I didn't introduce myself earlier. I'm the chair of the GASB. And in her first meeting as our vice chair, Jackie Reck.
Good afternoon. I'm Jackie Reck. I'm the vice chair for the GASB. I'm glad that you were all able to join us. This project is extremely interesting to me too, so I'm interested in what you have to say. Thank you for being here.
Chris.
Good morning and afternoon. I'm Chris Knight, GASB member, former comptroller, and private CPA firm employee.
Yes, Diane.
Good morning from Colorado. I'm Diane Ray, GASB member and former Colorado State Auditor.
Diane. Carolyn.
Good morning or afternoon. I'm Carolyn Smith here in sunny Columbus, Ohio. And I'm a former chief audit executive for the largest school district in the state of Ohio. And I'm currently a gardener and a killer of many houseplants.
Thanks, Carolyn. Next, in her first public meeting as a board member, welcome, and we're excited to have you here, Lisa Washburn.
Hi, I'm Lisa Washburn. As Joel said, this is my first meeting. I'm really excited to hear what you all have to say. I've been a municipal bond analyst for 35 plus years and very interested in infrastructure. So really, really curious about what everybody has to say on the topic.
And then our staff team, Alan, start with you.
Hello, Alan Skelton, Director of Research and Technical Activities here at the GASB.
I'm going to skip Joe because I'm going to turn it over to you, Joe, last, but Samara. Thanks, Ramada. And now I'm going to turn it over, and Joe Quickland is our project leader and will lead us through this. I'll turn it to you, Joe, for introduce yourself and take us away.
Morning, everybody. Well, good afternoon, everybody. Joe Wickland, GASB staff. Thank you again so much for being here. To echo Joel's comments, really appreciative of all the feedback and of your time meeting with us today. So before we get into things, just a couple items of housekeeping would be, please note that the forum is being webcast. It's being recorded and transcribed primarily for analytical purposes. The recording and transcript will be part of the GASB's public file because this is a public meeting of the board. Our objective for this session is to hear your responses to the questions about the proposals in the exposure draft. There are several ground rules intended to keep the discussion moving and to help us get through all the questions. Those of you who may have watched the first forum, we have a lot to talk about, and there's a lot of really great feedback to hear from all the participants. So Each of you will have an opportunity to answer each question. For each question, I'll start at a random spot on the list of the participants, and we'll move alphabetically down that list, and we'll go back to the top, depending on where we started. And then, so for clarity, I'll call on each of you by name for the virtual format. We hope that you will answer each question, but if you wish to pass on a question or just to echo what someone has said previously, feel free to do so. If you do choose to echo prior comments, please be specific about whose comments you're agreeing with. And you don't have to repeat everything they said, but just enough to note that who you're agreeing with, because it can be difficult to analyze. I agree with everything that's been said when the previous speakers may have not fully agreed with each other on certain topics. After everyone has had a chance to answer a question, we'll open up to discussion. At that time, you can respond to questions if you initially passed, or you can follow up on things other participants have said. Just use the raise your hand feature in Zoom, and then I'll call on you. And then after that, we'll also turn it over to the board members. We'll also be able to ask follow-up questions. And then lastly, unless you're speaking, please put yourself on mute, and then remember to unmute yourself before speaking. We've got long session this afternoon, about 4 hours. We'll be taking a short break about halfway through, but if you need refreshments or to take a short break at a different time, please feel free to do so. We just ask that you wait until after you've answered the current question before doing so. So before we get into the discussion questions for today, I would say, are there any questions before we begin? All right. Not seeing anything, we'll move on to the first topic, which is the definition of infrastructure assets. So paragraphs 4 and 5 of the exposure draft describe the proposed definition of infrastructure assets, which would amend the current definition provided in Statement 34. The proposed definition identifies infrastructure assets as capital assets that are part of a network. They're stationary in nature. They can be maintained and preserved for a significant number of years. And the proposed guidance also includes additional clarifications of the definition by further defining networks and components of infrastructure assets. So that brings us to the first discussion question of the day, which is question number 1. What feedback do you have about the proposed definition of infrastructure assets? And I'd say for the first round, why don't we start, Bill, if you would like to kick us off.
Thank you. I guess I'd like to briefly thank the board for allowing this forum. I think it's really important that you hear as many voices as possible, and doing this type of environment remotely is beneficial. Not everybody can get to Connecticut, so thank you very much for that. To the question specifically, the definition is fine, I guess. I do always get concerned when it's not very descriptive and very defined, that it gets varied in its use and how people implement it. So, again, I just caution you, I think the more guidance you can give in this area, the better. As an example, I know I was observing the last meeting, and there was some discussions about different types of infrastructure, networks or whatever, and what some of those components were. So how people handle a road as an example, whether they include sidewalks, do they include lights, do they include and when I say lights for lighting, and then lights to go stop and go, and the other ancillary components of a road, if you will. On the utility side, you're going to have infrastructure like piping, for wastewater treatment, those facilities, the piping that goes to the wastewater treatment facility, the treatment. I don't know if anybody's ever been. I don't even know what they're called, but there's these large tanks that the waste goes into and then gets siphoned out and trimmed out, and then it gets disposed of. So there's a lot of different things as to what infrastructure is. And I did review some financial statements of some significant utilities and found out that the word infrastructure isn't often used. Things like plant are used, the electric plant, the water plant, the wastewater plant, things like that. So I don't know if you want to refine will you require the use of infrastructure to be used, or the word infrastructure to be used, and then identify it as a network, and then the components underneath that? So I'll be curious to see how that actually plays out going forward. So that's all I have as it relates to that question.
Right. Thank you, Bill. Richard. Richard, you're on mute.
I'll have to remember to do that. Thank you. I appreciate the introduction that Bill gave by being the first responder to this. I think part of the problem is that there is some different interpretations of what infrastructure is all about. And having just completed an extensive amount of research and doing discussions with other people in the public as well as in the profession, I found that there was different interpretations. Some included buildings, and some included support services well beyond. The idea today is that if you look at infrastructure, if you look at a school district, which is under the GASB purview, they think of school buildings as part of the infrastructure, even though it's not technically part of the definition. So I think that one of my first objections was, and I don't expect you to reconsider it this particular round of changes to the rules, but is that I would really like a review of what should be done under these new proposed changes. I found, in having done my study on infrastructure, which also included capital assets, that there was a serious problem in definitions and what is included, and the views and what they put in the statements, the vagaries and subjectivities of how different cities approached it in their footnotes. And that's a big problem in the classifications. So one of the major themes I'm going to say, as I try to focus on this comment here, one of the major themes I'm trying to promote is that we think in terms of clarifying through the ability to standardize as much as possible the terminology that's used, as well as those subcomponents, to make it easier not only for those that are users, but make it easier for preparers and also those that have to be the users of government, so that we have more comparable data that can be viewed across one city to another or across one power district to another. And so that would be an overriding theme. So the definition that you've used in this case here, I think the way you've described it, I have no objection to the network that you have and adding in telecommunication towers. So if that's all you're looking for, I've already said my piece. But I would say over the long term, I'd really like the board to keep this in mind and on the agenda. I see no reason to provide clarity on a broader basis. I see no reason why capital assets shouldn't have been brought into this project. And to tell you the truth, when you go to New York City and you see in their footnotes that the way they describe infrastructure is betterments versus new construction, and you're not knowing and there's no definitions of what those are, it's almost impossible to compare as much as you would want to be on a fair basis. So there's problems in this area. I'll stick with the point of what you directed me to answer. Though I swayed from that. The way you've defined it under this current project, I'm fine with. But I think that it's much too narrow, and it needs to be on the agenda as you look at this particular project. And there'll be, I think, subsequent projects related, that you should keep that in mind, that this is an ongoing work in progress.
Thank you, Richard. Next up would be Jody.
Thank you. Like Bill said, the definition may not be descriptive enough, and like we talked when we discussed this back in May, that different governments may define what they think a network of infrastructure assets is differently. So you might have a highway district, for example, that says we have one network, and it's the transportation network. And they would have within that their roads, their bridges, their sidewalks, their gutters, street lights, everything in that. And then another one might say roads are a network, bridges are a network, and I think that's fine with to GASB is fine if a government defines their networks that way. So maybe some examples of what a network of infrastructure asset is could be helpful to the governments and bring some consistency. I know that as soon as you make a list, then governments use that list and they don't always, think beyond what's in there, but some more guidance there could be helpful. And, Richard mentioned buildings. Again, we know that GASB's view is that there will likely be very few instances in which a building would be considered infrastructure, but I think just mentioning the word buildings will start governments thinking that, ooh, we have buildings and maybe these should be part of the infrastructure asset. And I don't know if that was necessarily your intention. So maybe some further clarification on what you mean by buildings as it relates to infrastructure.
Jody. Next up would be David.
Well, first off, I want to thank the board for really all this process and the opportunity to share feedback. And then to the question at hand, I think, at least to me, and from where I sit, kind of the third part of the definition, can be maintained or preserved for a significant number of years, is the part that's doing the real work. And, I think hearing a lot of the conversation about the network question, I know network comes up in other parts of these proposals, so having a definition of network is going to be important, but certainly seems to be a potential source of confusion if you kind of look at some of the feedback that's provided, which I think takes us to clarity and guidance from the GASB on implementation is going to be really important to the success of this. And what does that mean? What gets included? How to think about buildings, since that's come up a couple times, and I think is a very relevant consideration. And so the definition I think has a lot that makes sense about it, but giving guidance about how to apply it will be incredibly helpful.
Thank you, David. Next up would be Lisa.
Sure, thank you. It's Lisa Marie. I agree with the comments as well. And in talking to my staff and some of my member agencies, we would like many of the comments have been said, just better description. And I know you don't want to get to writing down a list of what infrastructure projects are, but it would be helpful to have some level of examples for what are infrastructure versus non-infrastructure, and maybe even having a consideration of materiality and scalability to the concepts that you're trying to wrap around this notion of infrastructure as we get down to having to implement, because it'll be interesting to what level of, is it less, start with infrastructure, then less critical assets, and then maybe FF&E. So we certainly would like some scalability and materiality around this discussion as well. Thank you.
Thank you, Lisa Marie. Next up would be Sean.
Thanks, Joe. I agree with the initial comments by Bill. I think it would be helpful to be more specific in the definition of infrastructure assets. One other thing I'll mention in particular we happen to be a business type activity providing public power to our ratepayers. We also have a smaller service territory with a water utility. One of the challenges that I anticipate, not necessarily with the definition of infrastructure assets, but maybe on the componentization part of the process, will be we're very vertically integrated, meaning we go from generation to transmission, distribution, and ultimately service to our retail customers. And we have systems in place, for instance, communications, IT, and other assets that could be challenging to distinguish and segregate by those different lines of businesses. So I foresee that to be a particular challenge for utilities that provide multiple lines of service to ratepayers. So I'll just end with that. Thanks, Joe.
Thanks, Sean. Next up would be Gary.
Yeah, definitions are everything when it comes to financial statements, of course. One thing that brought me here today was, Utah sometimes does things a little differently. We're starting what we call a trail network, where we're taking people off of our infrastructure, capacity and efficiency, and we're putting them on these smaller networks of trails. Now, would that be considered, a part of infrastructure? It is taking resources off of our main arterials onto another byway. So, is that something, the definition of a network would be beneficial here, so we would know how to bring these about on our statements.
Thank you, Gary. Next would be Stacy.
Great. Thank you. We agree with the definition and the improvements to the definition. But as several have already stated, providing some specific examples that are common and even unique would be great. So, for example, we've had things come up with at airports, is the terminal part of the airport or is it the building? So just some very interesting questions. Also the level of componentization. So, which was brought up also, you have like a sewer system, which is an infrastructure asset. Would the pipes, pump stations, and treatment plant all be separate and then additional components within those? Or so the level and the definitions of, and some examples of what is the network versus the components of the network. And that might fall into later the category classifications in the notes, so that might help with that discussion as well.
Thank you, Stacy. And then last on the list would be Cameron.
Hello, everybody. Yes, I did want to say I noticed that I do appreciate the non-retroactivity that we are potentially going to take for the decomponentization proposals. Hopefully, that will not be that are not going to be applied retroactively. In terms of the definition, of the infrastructure assets, yes, we do agree with the way it's being done, but have considerate, reservations, I guess, like everybody else, about the definition of a network and how we are going to and how we're going to have comparability across different entities of different sizes. I can think of about 4 different ways, me personally in Travis County, how we would categorize a road network. But I'm not sure which one is going to be most comparable to other entities and how everybody else is going to do it. The assumption would be that we're trying to get comparability across governments. I think that would be very difficult unless there is further description, definition of a network, ideally maybe even describing of the different kinds of networks that you could have, whether it be a road or water, or we have cabling that we've done here in Central Texas. So there are many different kinds of networks that you could have as well. And the more description, the better definition you can give, the better it would be for us.
Thank you, Cameron. Well, that's all the participants there. I would say before we move on to the later questions, the next part of the forum would be, would any of the participants like to follow up on what they've just heard or add to their prior comments? And if you'd like to do so, again, please use the raise hand function in Zoom and I'll call on you.
Let's see if I can find it. Raise hand.
So I think I have Bill first, and then we'll go to Rich.
Thank you. A couple of points. It was brought up about kind of what I would identify as kind of multi-use, talking about as an example, maybe if you look at electric utility where they have poles and then undergrounding for their electric system. Along with that, on those same poles, they have potentially internet access component, revenue generating entity, or other things going on that attach to those poles and how you would treat those. And I want to bring up the point that a larger utility that has a lot of resources may be able to go ahead and distinguish those the way you're looking for and identify those. But you have many smaller entities that do multiple things, but they're medium-sized municipalities, and they may not have the same resources to be able to segregate out those pieces properly to give you those different components. I do have to comment on materiality because we always talk about it in accounting and auditing, and nobody wants to identify it. And so when you get into saying, well, is it material? What component of the network is going to be material for you to segregate out into a subcomponent? And we get into this later discussion, how is that going to be handled? And who's going to have the resources to be able to do that? So I would just say that when we put this out in a standard and we're applying it to every entity around the country, that it's going to be treated differently, as some folks alluded to. And then people's ability to be able to do the segregation that you're looking for is going to be challenging depending upon the size and resources that the entity has. So I just want to reiterate that. And I also thought it was interesting, the comment about airports. I spoke to somebody at a significant airport, and that's exactly right. What do you view the airport? Does it have, are there airfields and where the planes land? Is that a piece of is that an infrastructure or a network? And then the people movers that they have to go from one terminal to another, is that another network? And are those buildings associated with it? And then one last piece as it relates to buildings, going back to my water utility example. There's a building, I remember standing in a building as an auditor. I think I was a manager at the time. And it was a filtration system. The whole building was a filtration system. So should that building be included? I would think the answer to that would be yes, but should that be treated as a building? So there's a lot of moving parts, and I'm not even in these as a professional. So I'm not a professional electrician, electrical person, or certainly a water sewer individual, but you can see the complexity and the challenges that people have.
Thank you, Bill. Richard.
I'm just concerned about the same thing as I think that a number of those on this call have brought up. The lack of specific definition or clarification, consistency, improvements. It's interesting if you look at the references of for infrastructure within the document. One of the areas you'll see infrastructure mentioned, of course, would be an estimated useful life, be one of them. And then you see it mentioned in the changes in the statements, which are for all capital assets, but includes infrastructure. The consistency of what's in each category is really confusing. Sometimes it appears that improvements are mentioned in the estimated useful life, and yet they belong to the infrastructure category. How do you reconcile that? I mean, we did a analysis, deep dive into probably 60 cities, and we found these issues to be problematic for us. The other issue is, and I think this was referenced when you're talking a little bit about materiality, is that the cities differ quite a bit in their ability to choose, apparently, at least it appears to be. They choose as to what the minimum size is they consider for their capital assets, including infrastructure. And we should be as specific as possible on these rules and clarify them if there's any deviations. So I think that this whole exercise reminds me a little bit of the way the original pension funding notes were in the audit, which improved quite significant in later years. But we want to recognize that we all need some guidance, and your users need some guidance to know what you've got in these. Thank you.
Thank you, Richard. And then we will go to Sean next, and then for the sake of time, we'll turn it over to the board, and then we'll be moving on to question number 2.
Thanks, Joe. Just real quickly, I wanted to add, I would encourage GASB to consider having industry-specific guidance related to infrastructure assets. Selfishly, for electric utility, that would be very helpful to have something related specifically to electric utilities and potentially water, sewer, and other as well. So just wanted to add that. Thanks, Joe.
Thanks, Shannon. All right, before we move on, do any of the board members wish to follow up on what they've heard regarding the definition of infrastructure assets? Oh, Lisa.
I have to ask my first question, right? Um, so, Rich, you were mentioning that, well, actually, everybody was mentioning that there's a need for more standardization of terminology in the definition of infrastructure. But then I also heard a lot of different challenges in being able to provide that specificity. And then, Rich, you were talking about kind of the evolution of the pension disclosures. Do you think that there's a way to, or what would be the best way to kind of start that progression towards getting more standardization? Because it sounds like it would be very difficult to do right off the bat.
Well, I think right now the footnotes and the clarifications that are in the document are pretty clean. So it wouldn't take a lot to be able to define them. And then make sure, at least to make sure that the city and their accountants are on the same page as everybody else. So that would be a starting point, providing the clarifications of what they could be, what's in the network. I think the fact that you've asked for different networks is a good starting point. And whether that infrastructure applies to business activities versus governmental activities, most of the governments, they're supposed to, segregate those two areas. But if I recall, they don't all do that. So the network should be clearly defined. Those would be, I mean, I think that there's so many things I would like to have made more clear, Lisa. But it's a question of getting started, which was, you're right, your words you use. And I think when these rules are being, or these words are being put in here, that they make sure that everybody understands we're on the same page.
Thanks, Richard.
Thank you.
I think Stacy had her hand up next.
Thank you. I think some of the confusion is we use the term component in the definition and then also in some additional areas or additional paragraphs later that are related to other things like disclosure and calculations of estimated useful lives, and when we break things out. So that's a complexity since we're using the same term in some different areas. But I think what would be helpful is, at least what I'm hearing, is it the activity of that network? So do we want the networks to be by the movement where wheels are involved? So like the road network includes everything in which you drive on. And the water network is everything that transmits and delivers water from the ground to the faucet. Like, at what level of detail do we want network to be? And then when we go to more defined pieces within that network, what is that piece used for? Is it used for disclosure and where? And is it used for calculation and where? So I'm thinking we start high level and then go down depending on where we're wanting the additional information. That might be helpful.
Stacy, and then next was Cameron.
I very much agree with what Stacy just said, in that I think that at a minimum, I think if networks were defined perhaps at a high level, at least like kind of like Stacey, whether and at least give us some direction as to, hey, here are your 5 major networks you could have. And because I understand giving too much detail is probably not what you want to do. You do want to leave some definability by the entities that are going to use this. But I think that there definitely needs to be more structure provided onto how do we create, for a road network, what should I be including? Because ideally, I don't want to include sidewalks and gutters if nobody else is, or something like that. I think some of those items you could potentially define or maybe put into the buckets better, which would I think would help the people that are implementing the GASB, would really give us more direction on how to move forward.
Thank you, Cameron. And then Next, we have Lisa Marie, and I think right after that, Bill. And then for the sake of time, we're going to move on to the next question because we still have a lot to get through today. So Lisa Marie next.
Thank you. And I really appreciate the comments. And I'm not sure how challenging it would be, but I really believe that having a consideration by industry could help with the process and potentially having a phased approach instead of applying it for for the whole industry, for all of the industry in one single year could help us figure out how to tackle this issue. But I think by industry would be perfect. Thank you.
Thank you, Lisa Marie. Before we move on, Bill, did you have something? I think you had your hand up.
Yes, just real quick. Actually, and you've done this before a little differently, but and Sean kind of alluded to this, potentially consider implementation by industry, electric or BTAs that generally, not all of them, depending upon what they do, are revenue generating activities, true revenue generating activities, and would be able to absorb the cost and the implementation as a lead. And then you would learn from that process. So consider that, please.
Thank you, Bill. And before we move on, Stacy, you still had your hand up. Did you have oh, all good. All right. Well, for the sake of time, we're going to move on to the second topic for today's discussion, which is recognition and measurement related to components of infrastructure assets. So paragraph 6 of the exposure draft proposes to separately recognize and depreciate a component of an infrastructure asset when the cost of the component is significant in relation to the total cost of the infrastructure asset, and when its estimated useful life is substantially different from that of the infrastructure asset. Board believes that the resulting amounts recognized as infrastructure assets and annual depreciation expense will be more representative of the actual use of the infrastructure assets. However, as noted in paragraphs B61 through B66 and the basis for conclusions, a board member has expressed an alternative view related to difficulties that the application of this proposal may present for governments. So due to considerations related to effort that may be necessary for some governments in this regard, would also note that the componentization proposals are not expected to be applied retroactively to existing infrastructure assets as proposed in the exposure draft. So that brings us to the second discussion question today. Question number 2, what feedback do you have about the proposal to separately recognizing and depreciating components of infrastructure assets? And this time we will start with Richard, and then we'll move down the list. So Richard, if you would kick us off.
First of all, I hadn't contemplated the issue of componentization when I started this, looking at this these GASB rules or standard changes, but I do see the wisdom of it, and I think that here's why, from my standpoint as a user. As I said, we finished a study of 2,000 cities. We're going to do other sectors. That was the first of them. To take a look and to make cities accountable for the purposes of credit quality and on how well they manage their capital assets. And actually, the studies come out with some very interesting results that I think would be hard to argue that the results themselves are wrongly placed as to who looks bad and who looks good. But the issue of accountability was what I'm talking about here. And one of the things that our study was based upon was accumulated depreciation. You have accumulated depreciation in there for a reason. And that means that is spent, that is economically spent or consumed assets, capital assets. And so, we look at that number here, and when you look at these estimated useful life numbers, the ranges are enormous. What do they mean by that? Well, really, that's nothing. That's not defined in the audit. That's another issue. We'll get to that in one of the future questions. But the fact is that we want to take out of accumulated depreciation when a road is repaired. If you just pave it over, do you take out the entire accumulated depreciation of the road before? And we know that that's not going to be the case. That shouldn't be the case because the road bed really lasts quite a while. So when you do a pave over, so that in order to get a more precise and clear definition for accountability of what you can technically take out of accumulated depreciation, you have to componentize. So it's really in the interest of governments to componentize for that reason. because it's an opportunity for them to reduce what they've already spent and what they're replacing, which is new, which which when you put the new one in, you're taking that old one out, it's going to make your numbers look a lot better. So it's for your best interest. Now it's complex. I understand that. And I'm totally in agreement that none of that should be retroactive. I think I'm really patient about this process. What I want to see is the whole process improved for the interest of everybody's best interest, not only the users of the documents that are investors, but for the users that are elected officials. I really wanted to know when I went into government, how bad where we really are. And I tell you, the results, I could give you anecdotal stories about that, was not a very pretty picture of the current state of accounting of what we do for infrastructure when you're an elected official. So if you're trying to do an honest job, where do you go to get the numbers? You rely for often subjective impressions. So componentization, I think, has value. In order to make it more digestible, though, I think that it's got to be that you don't want to componentize too much. You want to keep it simple. I'd rather see GASB start out keeping it simple with fewer issues of componentization and then build on that as it becomes more obvious whether it's in a public power utility or whether it's in a public higher ed or whether it's a city, whatever it is, of what makes it look a little bit more obvious. I think we're using the example of roads because it's easier to understand that. Bridges are another one that's easier to understand that, where you don't remove the entire bridge when you do the repair and replacement. By doing it right and putting the new capital investment into the picture, you will make your numbers look a whole lot better, of course, because you're going to take that. If you're taking the appropriate amount of accumulated depreciation out, because you're going to now have less spent assets at work there. So you can see where I'm going with this. I'd like to see you do it. I want to keep it simple. May only have it for a few categories. If you can help by guidance and examples, that's going to make it easier. Preference is that you do it with standardization, if you could do that for each sector. And if that means slowing this process down, so be it. I mean, when you look at GASB 34 and how many times that process was slowed down in order to make it better, it was quite a few years to get it done. This is important enough to do it right, not just to do it. But if you keep it simple with the idea that you're going to do that in version 2, that's fine with me too. But just make sure that we're moving in that direction. That's it.
Thank you, Richard. Next in the order would be Jody.
Thank you. Of course, we're mostly auditors on the expert panel. So from the auditor point of view, we believe that going forward, separately recognizing and depreciating components of infrastructure assets shouldn't be an issue for assets that are constructed or acquired by the government. Where we see there might be challenges is when the government is not the one constructing the infrastructure asset. So sometimes roads, sidewalks, gutters are contributed to the government by a developer at the end of the construction. So the government doesn't usually have access to enough detail to separately recognize and depreciate the infrastructure assets at this time anyway. So trying to figure out this information for existing infrastructure assets that have not been tracked in this manner would be difficult and time consuming, which is why the board did not make application retrospective, which we very much appreciate. But the requirement for current year activity to be separated this way could be complicated for capitalizable improvements, replacements, additions, other components that relate to pre-existing infrastructure assets that have been recorded and reported at an aggregate level. So the government may not have the detail needed to link current year activity with a component or the piece of the aggregated infrastructure assets. So that's it.
Thank you, Jody. Next would be David.
Thanks. So I think we look at this piece as doing two things. One, as a general aspect, right? Having some capacity to reflect preservation and investments that extend the useful life and how things are reported. But then jumping ahead, as we look to some of the feedback on the assets that are beyond or have utilized 80% of their useful lives, I think the feedback we saw being delivered to the board included a lot of commentary of, here's an asset that's beyond its useful life that is in good shape, that we have functionally extended, but we haven't been able to reflect that. So I think we've also seen a lot of feedback about the challenges of componentization, and at the same time, I think you need to have something within the rules that allow for, kind of the extension of useful lives. And I think the componentization approach, for all the challenges in implementation, seems like a very, usable and thoughtful way of addressing it. And if you weren't going to go down this road, you need something else in its place to, I think, make the other pieces that are being proposed work.
Thank you, David. Next is Lisa Marie.
Sure, I just wanted to just share how this might be somewhat challenging for us. As an example, we currently manage a 300-mile pipe water system, and the way we maintain it is actually in pieces, like a quarter of a mile at a time, based on different assessments. So we're not driven so much by depreciation when we decide to replace it. It's through assessments. And so so there's a challenge of commoditizing, or whatever, I'm sorry for the word use. But so I just wanted to share that it could be very challenging for water systems, and how you try to make a component of an entire system, and then how do we really truly depreciate when we see it as a system and not as a component, if that's helpful.
Thank you, Lisa Marie. Next would be Sean.
Thanks, Joe. One thing I want to mention here is electric utilities tend to be very vertically integrated. So, for instance, Snohomish PUD has generation, transmission, distribution, and many other assets that ultimately serve the end user. And the point at which those component pieces are broken down into separate categories and depreciated will be a challenge, I think, for us going forward. One other comment I have is the term significant is not defined. I don't know if there's a common usage definition that would apply there, but I think having more specificity there might be helpful. Thank you.
Thanks, Sean. All right, next is Gary.
Yeah, as I mentioned before, I'm probably the smallest brain in this room, and it sounds like where I can contribute a little bit here is, it sounds like everybody on the panel here is very high level, looking at it from the 50,000 foot. I'm the one down in the weeds trying to prepare all of this. So the only comment I have is, when we try to break out these components, just even though we're a large agency within the state, we still have constraints on the availability of personnel to go out and try to take care of these things. And I'm not speaking so much as on our big projects, but I'm talking as the smaller infrastructure pieces. Do we add them as part of the infrastructure? For instance, if we're following the NEVI guidelines, phase one of a contiguous network, all of the charging stations will be part of the infrastructure. But as we get into phase two of the NEVI, then those will have to be added as a fixed asset and not part of the contiguous network. As of right now, I don't know if we have the available assets to keep track of those on an individual basis. For instance, if somebody, we're a decentralized system, so who's keeping track of the replacement of these? And that's all I really have to add on this part.
Sorry there, I think I froze for a second. Can you guys hear me? Okay, perfect. Sorry about that. All right, thank you, Gary. Next up will be Stacy.
All right. So this kind of lends to what I was starting to say earlier, which is we have a network, we have a component of a network, and then we might have components of the component. And how deep are we driving here? We do generally agree that separately depreciating significant pieces of assets is extremely valuable. And as a former preparer, one of the examples of why this would be valuable as a look forward is when you build a giant building, when these got put on the books at GASB 34, it was, here's my $50 million building. But then I need to replace the roof, and I need to replace the elevator, and I need to replace the HVAC system. Well, how do I break those out of this massive building that's one number in the asset record? And then figuring out how to break those out and componentize them so future me's can easily replace those as the smaller or the shorter life pieces of the asset are replaced. So thinking down the road to future accountants, it's super valuable if we put this into place now, even though it's a struggle now for accountants to try to figure out how to break these things out. So we looked at it from that point of view, but also with the depreciation and the estimated useful lives, and being able to provide a valuable, reasonable number for the lives of these assets when pieces of these assets have vastly different estimated useful lives. I do agree with Sean on the definition of significant. What's going to be considered significant? And that's hard. Everybody looks at it differently. So if we want some definition or some guidelines around what significant would be, that would be valuable. And we've also looked at some very interesting aspects of this. Should it be both cost and estimated useful lives, or is there at minimum we're looking at cost and estimated useful life and the varying difference, but it would be okay to go deeper than that, especially as a preparer wanting to save future preparers the difficulty of replacing components down the road when we're doing repairs or additions. So it's okay to go deeper, but we have at least this base level. But definitely what is significant, how are we going to break that out would be very useful.
Thank you, Stacy. Next is Cameron.
I would like to follow along the couple of people that have mentioned before, where we're talking about the component of an asset has a cost that's significant in relation. And then we also talked the estimated useful life that is substantially different than the estimated useful life. If there was a better definition of significant and substantially, I think that would really help us a lot as to if we're talking about, I have an infrastructure asset of 100 million and there's a component in there that's 15 million, is that significant? It's 15 million, it's a pretty large number, but is that considered significant in relation to the $100 million asset? I don't know. I'm not sure how to define that based on the guidance so far. I do, and I apologize, my comment about the retroactivity, what I mentioned last question was meant for this one, is we do appreciate that we are not going to try to retroactively have to figure out some of the components of our assets. But I will say, it's speaking to many of the members of our committee, especially the smaller entities, they expressed very strong opinions that it was going to be very difficult, especially to go back into infrastructure from the past to try to separate out, determine useful lives, determine what costs are actually left on the books, and to be able to get that data to be able to start this, and be ready to go when it needs to be implemented.
Thank you, Cameron. And then last is Bill.
I mean, I agree with a lot of what I've heard. I guess one of the things that I've heard today, as well as in your previous forum on this subject, is related to the investments community's concerns about looking at what I would identify almost as the modified approach. What is the condition of your infrastructure assets, and what are your potential costs that you're going to incur or that you're delaying? And I think it was Chris, the board member, who mentioned inter-period equity on this question in the last forum. I'm going to throw something out there that I thought about between the two meetings was, and should some infrastructure, and I would go roads being the simple example, at least in my mind, maybe they shouldn't be depreciable at all. Maybe you should put a road in and then you should let it sit there at the cost value that you put the road in. And many of the roads are already been in and been in for years, and then just deal with the maintenance and the maintaining of that road, and then add to that road when you make it a capacity issue. So in my simple mind, if you take a road from one lane lanes, at that point you would add to that original piece of infrastructure 2 lanes, and then you would capture all the costs associated with maintaining the ability of the citizenry to drive on those roads, right? With the exception being on a toll road where that's more of a business type activity and you have a much more directly correlated usage and revenue side of it. I think when we talk about most municipalities and counties, rural and otherwise, you don't have that same. It's a tax issue. People want roads in, or they don't want the road. They don't want the condition of their road. So I would ask. I don't know if that's been considered or talked about. I think a lot of this goes back to the subject of, gee, are we really wanting the modified approach? Are people really looking for what is the quality of the infrastructure versus what is the cost and depreciation? Let's face it, everybody, and I not everybody, some people don't, but the ones that I could find, if you're not doing modified approach, which I believe that's a small population, everybody uses straight line. And I would ask all us professional accountants, how many of us think that straight line is really capturing the interperiod cost associated with many of the infrastructure assets, and that includes your utility ones. So again, I think there's a lot in here. I also don't know if I think this is the right question to bring this up. And talking about one of the idea about the complexity of government financial statements. And I believe this question covers the related disclosure, which would then be by network, and then components to network would be part of the disclosure. And if I'm wrong in this, please correct me, or if I should be speaking to it on a different question. I see that expanding potentially voluminously the note disclosure on capital assets. I went in and I pulled up a utility that has water, electric in it, and they call lighting. It's a asset value of 5 billion, in excess of 5 billion, and it's about a quarter page in their fixed asset disclosure, their table, their roll forward table. So again, I think you're going to be adding a lot of disclosures as you get into this granular detail, depending upon how deep it's got to go. And that's my hopefully additional comments to the others.
Thank you, Bill. Before we move on to the next topic, want to make sure we turn it over to the participants. Would anyone like to follow up on anything that they've heard or add to their prior comments? And not seeing any hands raised, want to make sure also, oh, sorry, David.
Yeah, I just wanted to say 2 things in response to Bill's comments. I think first, as we look at things, the vast majority of reporters using the modified approach is for transportation. And then likewise, when we've been looking at infrastructure reporting writ large, not just within the ACFRs, surface transportation is an area where the DOTs have, kind of thorough and in many ways consistent asset management systems that, have the underlying information about the condition, current status, future trajectory of their assets. And so I think thinking about if there are ways, is there an opportunity to use that as a place to push forward reporting that may not be doable for smaller entities, may not be doable for other infrastructure categories. I think from where we sit makes a lot of sense. This is an opportunity to kind of push things forward, and then if it works, see about the feasibility of connecting that to other areas. And then I think the other is that when we've been looking at the evolution of the information in the ACFRs on pension and OPEBs, universality of having actual valuations and having kind of a consistent, technical report that contains a lot of the information and has, both systematic outputs, but also like outputs that have been shaped by the actual profession. Seems like another area where, this can't just be on the auditors and the accountants. This has to be kind of a collective effort of the stakeholders, including the people on the asset management side.
And thank you, David. Next hand is Stacy.
Make sure I lower my hand this time. I wanted to make sure I clarified Jody's comment about like the future. I did have a note and then I think I skipped over it. It would be maybe an implementation guide question. What would the expectation be going forward with componentization on the existing assets? I think that needs to be clearly defined and put out there for government so that they know what that expectation is going to be going forward. And then Bill made a really good comment with the modified approach. The more that we've been researching and looking into this exposure draft, the more we are leaning to why potentially is the modified approach not being highlighted more. And it would be, especially with roads and water lines and sewer lines and whatnot, it might be a more beneficial approach for these governments since we know they are tracking the conditions of these as they are anticipating capital projects.
Thank you. Before we move on to the next question, I also want to make sure we turn it over to the board. Does any of the board members wish to follow up on what they've heard regarding components? And I see Joel first.
Thanks, Joe. I'm gonna, I guess, make a comment rather than question because a lot of people have talked about the modified approach, and Stacy even just mentioned that why is it not highlighted more? I'd say it's not highlighted more in here because it's not changing much, right? But that doesn't mean the board doesn't think that it's a viable way to account. In fact, I'll speak personally as one of 7 board members, not for the collective board. What differentiates infrastructure from other capital assets tends to be that the way governments manage them is that they preserve them. They don't actually often replace them. And so I would argue that the preservation approach, like the modified approach, is probably the better way to account for these things. It was just a cost benefit decision that I think the board made not to require it. And there are some others where you can get in how standardized is there a measure that we could put them against. Roads might be the most developed there, other infrastructure not. So there are things we could have done and we talked about, but in the end, for cost benefit reasons, we kept it as an option. So certainly if governments have the systems in place and the condition assessments, they're willing to do those and all that sort of thing, they have the option. We kept it in there. And so in fact, I think that our research showed that users really valued that information the most. I would encourage governments to take advantage of that, in particular when the depreciation stuff and these disclosures don't make sense because they're really just preserving them. Maybe switch to the modified approach.
Thank you, Joel. Alan. Alan, you're on mute.
I don't know if I have a question on this, and maybe it's just a couple of comments, but I figured clear it up now because we might be here for a little while longer today. Number one, when we say significant, when the board says the word significant, the board means material. Now, we're not going to tell you what percentage of material means, but if you see the board say a significant cost, that means a material cost in relation to the overall cost. So whenever you see that word significant, you could just replace it with material, and that's what the board means. I'd also say when the board uses the word substantial, that's a much higher bar than significant. So significant is material. In this case, we talk substantial useful life. We're talking about useful lives that are very different than the overall. So I don't know that we'll get into telling you what percent significant is, but just know that significant equals material. The other thing I'd say that I think is something we can talk about as we get through this a little later, but, and Lisa Marie, you might have mentioned this, and I worry that there's a little bit of confusion on this, and not by you, Lisa, but Lisa Marie, it's by a lot of people. You talked about how you do a lot of your work in projects.
Mm-hmm.
And I'd suggest a project doesn't have anything to do with componentization.
Okay.
A project is just how you're deciding to add to or maintain or do maintenance on your assets. Componentization is about, and I'll use the road example, Lisa Marie, and if I could use an example in your world, I would if I knew one off the top of my head. But I might do road work by project. The components would be the surface versus the substructure. In fact, it's a project, that's just how I'm doing the work, right? That's just how I might decide to budget it for a given year and how much work I'm gonna do in a given year. Componentization would say, look at that road and what pieces of that road, the substructure, the surface, has a cost that's significant in relation to the total road and has a substantially different useful life. So I do think there's some confusion on folks mixing up componentization and the way I actually manage the maintenance of the project, of the assets themselves. Does that make sense? I see Lisa Marie shaking her head a little bit, because I do think that makes it a little more complicated, right? Because you might have projects, but it all might be just one thing and there are no components, and therefore you're not breaking it apart. And we're not trying to change, the board's not trying to change how an entity would think about how they maintain or how they budget or how they categorize the work they do every year. You said you did it by project, perfectly fine. There's nothing in here that would change that. And so those are two slightly different things. I hope that helps other people as we go along. We probably got to make sure we don't conflate projects and components, or unit of account really and components, because they're not the same thing. The last thing, I don't know if this is a question or maybe just another comment. This idea of donated infrastructure. I just would love for folks to help me understand why the government that's receiving a donated infrastructure from a developer wouldn't be able to get that developer to tell them what the cost of the pieces were. Now, they might not get it today, which I understand, but why, as they go forward, could they not get that from the developer? And if they couldn't get specifics, why couldn't they estimate the numbers?
Yeah.
All right. Thank you, Alan. I think next in order would be Richard.
Yes, I want to keep it short as I can. I just thought about it that I thought, I better say something here. Bill, I appreciate your comments, and that's the idea here. When you got something as complex as this, we better listen to one another and to see if we can find ways to compromise or to come to the truth here. But I want you to make sure that you understand, I don't agree with your point that we're all only looking for some version of the modified. I'm fine on modified being done, but I think that the numbers that we're providing in an accounting statement here about historical cost and then how long do we expect it to last, I think does provide a good measurement for us. And we're trying to change the world of credit analysis so that we have a more standardized approach to evaluate this. My findings based on what we have today get us pretty much where you would expect that they would be based upon if you did your own inspection of the cities that were in the report and how they came out. However, I think the big issue here, and it's not on one of the questions here, I'm sort of surprised. One of the big issues that is a problem for everybody is estimated useful life. I think it's a very important tool and potentially, but it can be improved. And I was going to just comment on that when you get into the periodic review, so I'll hold it for that to get into more specific comments. But I think that to get out here and make sure that you get my point across here, I think to the extent that we can evolve and improve the componentization portion of this will help us on using estimated useful life more rationally. I think you improve it as the next step forward. So to the extent we can do that, I think we're all better off. And I think if we get into nitpicking how much we put into detail on this, we're going to be in trouble. So the materiality issue, which has always been an issue for the SEC, and when you're looking at bond disclosure, what is exactly material? It's going to be difficult for the board to decide that, but I think that the guidance a lot of times there is some guidance out there as to what it is, and I hope you can rely on that guidance to put that materiality to work on that standard. Thank you.
Richard. Next up is Cameron.
I did want to comment briefly on donated assets, donated roads, sidewalks. We do, and speaking for Travis County, we do have usually between maybe $40 to $70 million worth of donated assets annually. We typically, most of them are roads. We typically apply like an average cost to that. We do not get information from the developers. Not actually a decent thought. Was gonna write that down and think about potentially. Now, granted, we're getting maybe 6 to 8 million a month or something like that, maybe. So it might be hard to track down all those developers and try to get their different costs and stuff. But using the average cost has worked for us, and we do adjust that based on at least annually.
Hey, Joe, real quick before Sean speaks, because Cameron, to your point, you're using estimates. You're using your average cost as estimates for what those numbers are, and estimates are not a bad thing, right? So we can do that. So that's what I was kind of just poking at. So I appreciate you saying that.
Sure.
All right. Thank you both. Last one we have, we're going to go to Sean, and then we're going to move on to the next question for the sake of time today.
Just real quickly to respond to Ellen's question about donated assets, we do require a bill of sale from developers, so we won't energize that asset. Part of the step in closing out the projects is requiring a bill of sale from the developer before we energize that asset.
Thank you, Sean. All right. We're going to move on to the third topic for today, which is periodic reviews. Paragraph 7 of the exposure draft proposes to emphasize existing implementation guidance for performing periodic reviews of the estimate useful lives and salvage values using the measurement of depreciation expense for all capital assets, specifically for infrastructure assets that are being depreciated. The board's intent is in part due to the significant number of years over which infrastructure assets are used to provide service, and concerns expressed by users during pre-agenda research indicating that a significant number of governments have infrastructure assets that currently are reported as fully depreciated, even though those assets are still being used by governments to provide service. I would note also specific to this one is that the exposure draft proposes transition guidance that would require such a review to be performed at implementation, and that changes resulting from that review would be reported retroactively by restating beginning net position or fund net position for the cumulative effect of that change on prior periods. And so for the sake of time today, kind of tackling the next two questions together. And so the first question is, what feedback do you have about the proposal to perform periodic reviews of the estimated useful lives and salvage values of infrastructure assets? And then the follow-up question is, what feedback do you have about the proposal to perform that review as a part of implementation and to restate beginning net position or fund net position for the cumulative effect of that change on prior periods? And for this one, Jody, if you wouldn't mind kicking us off.
Thank you. So the expert panel does not object to the board's emphasis on periodic reviews of estimated useful lives and salvage values for infrastructure assets. But we do have significant concerns about the provision that in paragraph 18 that would require it to be a restatement of beginning net position or fund net position. Changes in estimated useful lives and salvage values are changes in accounting estimates, and per GASB statement 100, these changes are prospective and not retrospective. So we think they should follow GASB 100 and be reported prospectively, unless facts and circumstances from the review indicate that there was the change represents a correction of an error. So when you've got auditors in there auditing this restatement, and rather than following GASB 100, we think this could cause some confusion and some issues between preparers and auditors.
Thank you, Jody. Next up will be David.
Thanks. Yeah, and I think as we understand it, right, this review process is in part meant to make sure that the useful lives are going to be kind of an accurate and useful inputs to that the note disclosure of things past their useful lives or things that have utilized 80% of their useful lives, and so getting that number right has become a kind of high salience input. So I think kind of acknowledging the implementation difficulties, this seems like it will make the disclosures more accurate going forward, given the new disclosures being proposed.
All right, thank you, David. Next is Lisa Marie.
Thank you. And I also appreciate the clarifying comments from Alan. It'd be great maybe if we can add some clarifying language as well, given your comments, that would be great. Because it is hard for us that are doing the work every day to decipher all this information. I would emphasize, I do believe we need to get useful life right in our assets, but I will say for a large water system, we do also rely on assessment and condition. We don't just rely on useful life, because some of our assets do have useful life up to 100 years, but then sometimes the pipe may break at 50 or vice versa. And it's such a massive amount of dollars to invest in the system. We don't want to just be held to a useful life when we're trying to replace our system. So if there could be some language to allow for condition over age, just some kind of language to allow for that assessment, and maybe that gets back to applying these standards by industry, might be helpful as well. Thank you.
Thank you, Lisa Marie. Sean.
Thanks, Joe. A couple quick comments. I agree with Jody's comments regarding retroactive restatement. If we could apply the changes in estimated useful life and salvage value prospectively, I think that would make the implementation a bit easier for the government or for the entity. I also agree with Lisa Marie's comments about condition assessments, allowing for some variety in the useful life of infrastructure based on the condition that might be outside of the range of a normal useful life would be preferable, especially for public utilities. One suggestion I have on another topic, periodic is not defined in terms of frequency, and what that may end up resulting in is inconsistency in how that term is applied in practice. So, maybe some guidelines around that would be helpful as well. Thanks, Joe.
Thank you, Sean. Next is Gary.
I really have nothing on this question, so I'm going to pass.
Good. All right. Thank you, Gary. Let's move on to Stacy.
Well, governments are supposed to be doing this already, and moving it to Category A codification benefits us hugely because we know that governments are not doing this. And we see it through our audits in that governments are sitting on a vast amount of fully depreciated assets that they are still currently using and have no plan to get rid of. So we fully support the retroactive application, because if governments were doing their periodic review, then their retroactive application should be negligible. Plus, this number has a drastic impact, as already stated by David, on the disclosures being proposed that could potentially impact that 80 and 100% disclosure, as well as the average weighted historical cost number that's being proposed as well. So we do feel that doing a retroactive application is extremely valuable with everything else that's being that estimated useful life is being applied to in this proposed standard. We also thought with the periodic review, it'd be great to have, we're looking at a set number of years or something like that in the standard. However, realizing that these are long-lived assets. You may have a 150-year bridge, so asking a government to evaluate it every 3 years seems inappropriate. So maybe a percentage might be applied, like 10% of the years or something, or telling the governments that they need to define it in policy, which aligns with some other standards that have been passed, that there needs to be a policy on this, and then have that be disclosed in their note, in their SSAP on that. We don't have a lot to say on the salvage values, mainly because we do know that salvage values of these types of assets, most of the time, like roadways, it's rubble that's being hauled off. Is there really a salvage value? But we do realize that there's some assets that may have a significant secondary market value. So we do understand there's some salvage value questions, but we have no feelings either way. We would support either yes and no on the salvage values. Also, I heard this as a comment, so we wanted to add. Accounting is estimates, but they are also not set it and forget it estimates. So really, really stating that it's super important that governments are looking at all of the estimates that they're putting into their books. And estimated useful lives is a huge number. It impacts a huge number on our balance sheets and our net positions, and that it needs to be fixed. And we would actually support this across the board on all capital assets. Thank you.
Thank you, Stacy. Next is Cameron.
We do definitely support the periodic reviews. Agree with on implementation. I mean, that almost seems like a no-brainer that you're gonna need to probably do a lot of work just to get an idea of what you're looking at before you even start with your implementation. We do feel that the kind of agree with Jody, and I believe someone else had mentioned that to the restate, feel like that going back and restating beginning that position, really feel like it's more of a prospective as opposed to a retroactive type of thing. And that's all I have for that.
Cameron. We'll go back to the top of the order. Bill.
Just one clarification for me is so implementation would allow the restatement of the beginning balance, and then any future would be recorded as a change in estimate. Is that correct, Joseph? Is that okay? I agree with that, obviously, for the reasons other people have stated. And I want to say Stacy stole my thunder because as we were talking about this, I thought that was a good idea. Put a policy in or add that governments create a policy for this. I would add to the policy potential would be suggest maybe varying degrees similar to revenue recognition, where you might have one revenue recognition period for taxes and another for grants, as an example. So similarly, for short-lived assets or whatever the government might choose to do, you have one reassessment period, or if it's just infrastructure assets, maybe you do it by types or something like that. So allowing them some flexibility when they do the analysis.
Thank you, Bill. And last would be Richard.
Thank you. This is, to me, one of the most important questions that you're asking today, because in our research, one of the biggest problems is unestimated useful life. And when we try to seek out finance directors to talk about this, or auditors, or anyone that could talk about it with it, it was almost like we don't really, I mean, we got to look at that. They haven't looked at these things in a long time. We need to have them take seriously. Lisa, or Stacy, Lisa, you made some good comments here earlier too that stuck in my mind. But Stacy, your comment here, I think, was really on target. That's what we're trying to achieve here, is some level of accountability in the asset area that we can quantify and see how they're going. But if it's fair, to be fair to governments, is that they got to do their share of the work too. And that is, they need to step up and take a look at, are these the correct estimates? Climate changes, we all know, that are affecting things since the old days, and we had to look at that. We had to look at materials that are used today. We had to look at traffic patterns. All those things make a difference. Detroit had a lot of traffic at one time, not as much anymore. Same thing with Flint. If they ever based them properly on traffic those days, they had to readjust them. So I think the matter of how often do you do it, 5 to 10 years, I'll leave that up to you, but I think it should be something that becomes a protocol that we can all accept. I'm not sure about the issue of, I'm willing to go with perspective to get this right for going, because this issue's been an important concern of mine for almost 50 years. And so the fact is, we're still in the same place when we were talking about infrastructure and ruins as we were back in the 1970s in some ways and evaluating it. So quite frankly, if you're making progress on this over time, then we'll realize that this is going to improve in this world in which data is king, and data is easier to get at these days. I mean, when you're talking about the historical, when you get a new capital asset, you write down historical cost onto your spreadsheet or in your software program, and you put an estimated useful life on, which you now have your estimated at the origin, and you periodically look at that. And if it looks like it can go longer, then change the road from a 20-year road to a larger road or a longer term road. That's in your best interest. Now, you may have to do some restatement. Let's do it in the most practical way for everybody. But estimated useful lives are all over the board, and it's a real problem. I'm going to hold you to them as a user of your documents, what you put in there. So you've got to be accountable for what you put in there. But if you look at our study, you get anywhere from on the infrastructure ranges that are in the footnotes, from San Francisco, 15 to 70 years, Chicago, 10 to 40, Irving, 50 years, right on the target, San Jose, 25 to 50, Detroit, 7 to 60, Wheaton, 40, and you get White Plains, 75 to 100. So every road, apparently, they've already, no matter what it is in White Plains, it's going to go 75 to 100 years. You can see how much thought was in this. I think you ought to be held accountable for it. And it's a good management guideline for you. But make the adjustments. If you've got the conditions that allow you to improve it, fine, make that change. And it'll change your accumulated depreciation number as well as your depreciation expense. And for those are our measures that are on our gauges. And I think that the response I'm getting from the analyst community on our process is starting to work. And I think it will settle in. Some version of it will settle in. And I think this will eventually be good for governments to be able to have that kind of thing too. So that's my comments. You hit me on one of the things I'm most passionate on, that I need to have GASB do what it can to improve this process. Thank you.
Thank you, Richard. Well, that is the first round for everyone on both those topics. I've then turned it back over to the group, and we'll use the hand raise function in Zoom. Would anyone like to follow up on what they've heard or add to their prior comments on the topic of periodic reviews? And barring anyone there, I also want to make sure to turn it over to the board. Do any of the board members wish to follow up on what they heard related to periodic reviews? All right. I guess we'll move on to the next topic, which is note disclosures by network. Paragraph 9 of the exposure draft proposes that information about infrastructure assets should be included within note disclosures about capital assets and divided by network. Statement 34 requires that note disclosures about capital assets be reported by major classes of capital assets and identifies infrastructure assets as a type of major class. However, feedback from users indicated that dividing information about infrastructure assets by network is useful for making decisions and assessing accountability in circumstances in which a government has multiple networks of infrastructure assets. So that brings us to the fifth question today, which is, what feedback do you have about the proposal to divide information about infrastructure assets by network within note disclosures about capital assets? And for this round, David, if you would kick us off.
Sure. And I think having the breakdown between networks is gives us important information about the scale of how different aspects of infrastructure usage is affecting the long-term fiscal position of state and local governments. I think as we've heard of questions about what makes a network come up a bunch of times, and I think Cameron made a good point earlier of there's going to be a number of reasonable ways to split things up, and it'll be very beneficial if everyone makes the same reasonable choice. And so kind of implementation guidelines that help coalesce around is pavement that is part of an airport, is that part of your air travel network, or is it part of your road network? What are the kind of ancillary assets categorized under? How broad are the network categories? All these things where there's a bunch of reasonable choices that could be made if we can provide implementation guidelines that get everyone to the same reasonable choice. I think it makes the disclosures more valuable.
All right. Thank you, David. Next will be Lisa Marie.
I would echo what David's comments. I think it would be great to have clarity around implementation guidelines around networks, but other than that, I have no other comments. Thank you.
Thank you, Lisa Marie. Next would be Sean.
Thanks, Joe. Just go back quickly to my earlier comment about vertical integration of specific types of utilities, business type activities in particular. Not having that historical information about componentization of those individual pieces of that equipment or infrastructure that are used in service delivery will be a challenge. I would hope for perspective changes only related to the note disclosure information. In particular, the annual depreciation going back 10 years would be an extreme challenge, I think, looking backwards, but prospectively would ease the implementation anyway. So thanks, Joe.
Thanks, Sean. All right, next would be Gary.
The only thing I have to say is the state of Utah does break these out already on our financials. So, no biggie for us. And I should probably disclose that we're on the modified approach, and it does make life a heck of a lot easier on us. So that's all.
Fair enough.
Thank you, Gary. Next is C.
Thank you. We do agree with the proposal to break them out, and we're thinking for larger governments like the state, the counties, the cities, where they have multiple types of networks. So maybe by activity, for example. I do agree with Sean. When you have a electric utility, it seems like that's the network. So there may be some leeway here with, is it by activity? And that saves some of our single or maybe dual purpose governments some heartache of, I can just do it by the two different activities that we provide.
Thank you, Stacy. Next is Cameron.
Yes, I do agree that breaking it out by, in the notes, breaking it out by network. And I personally, I do believe this is probably one of the more important parts of this ED is getting this part of it right and getting the everybody hopefully being reasonable in their determinations of what is in their network. Speaking for Travis County, I can think of at least potentially 3 to 4 networks that we would create: roads, cabling, potentially bridges if we separated those out, or if those were part of roads. I mean, we could, and again, to me, the more detail we give, the better. That's what the readers want. They want to know what are the major networks that we have and what comprises those. I think that is going to be probably the most important part of this. Will be getting that right and getting it, and then getting the useful life for those infrastructure assets correct. I think that will be and I'm thinking of, personally here in Travis County, we keep roads separated by road type. So we've got like 4, I believe. One is we have urban weak, urban strong, and we have rural weak and rural strong. That's how it is in our system right now. Is that going to be acceptable to break out road networks by type of soil, or should we do it by location, north, south, east, west in Travis County? I could probably come up with a few different ways, but some guidance on that would be very helpful as to what would be the most beneficial way to the reader to separate these out.
Thank you, Cameron. Next is Bill.
I mean, I agree with what I've heard. Again, I guess I spoke to this earlier out of turn there, but yeah, just how complex or detailed are we going to get in the notes, and how much does that add to the financial statements, which most people would say are overly complex already?
Thank you, Bill. Richard.
I agree with making them more specific to the network. Some governments are already doing that. North Olmsted, Ohio already separates roads versus bridges, and they call it culverts. I don't know how bridges and culverts get put together, but they do break it out. I think the only other, I think that's good. Hopefully we wouldn't get into too many categories here in networks. But one thing that I think that I would like to suggest, though, is you take a look at it in some of the work we were doing here in testing how to quantify this. It would have been nice if the estimated useful life ranges that are in the footnotes matched up in categorization by type with the capital activity display in the footnotes, where you talk about additions and deletions, etc. They don't always match. And it's the more we make things standardized, the better off we are. We're really not saving that much time by just doing it in a vague, however haphazard way. So I would hope you would take a look at that at some point in time, try to get things to be consistent. So consistency will help us with not only accuracy, but in understanding of what we have in these reports.
Thank you, Richard. Last for this round will be Jody.
Thank you. We agree with everything that's been said this far and don't really have anything new to add.
Well, then I will turn it back over to the group. Would anyone like to follow up on what they've heard or add to their prior comments? And barring none, do any of the board members wish to follow up on what they heard? I see Alan's got a hand up.
I do, because I think this is important, and Cameron, you were hitting on it. And I'm just going to throw an example, and y'all can tell me if this is where the confusion is or not. And I'm not speaking for the board. This is Alan Skelton's personal opinion, so don't put this on the board. But if I were to say there's 4 networks: transportation, utility, telecommunications, and energy. There's just 4 infrastructure networks, those 4: transportation, utility, telecommunications, energy. And I said that the things in our transportation, like roads, bridges, airports, seaports, railroads, they're just different pieces of the transportation network. Are we confused about whether or not we're talking the 4 big things being networks or the smaller things being networks? And is that what the confusion's over? In other words, if I just said disclosure networks on those 4 things, and it's like, Lisa Marie, for you've got 1 network at that point, basically, probably. Sean's probably got 1 network, it'd be an energy. That's one level of detail. If the level of detail is, no, we want everybody to go 1 level below those 4. And within transportation, I want you to break apart your highways, your bridges, your roadways, your airports, your seaports, because those are the networks, and that's the level we're talking about. Is really the discussion about what is the right level?
I think, Cameron, you've got your hand up.
Yes, I would say my answer to that would be yes. Is what level, if it was in the guidance that said just focus on those 4 and don't go below that, I would be okay with that. If you want us to detail out in transportation what are the networks that we have inside transportation, I'd be okay with that, as long as there's I guess as long as you specify what it is that you're kind of looking for.
Yeah, I only asked that, Cameron. I appreciate the response, because I think those 4 big picture things are somewhat standard. You can name those 4. It's when you get below that, it becomes a little less standard, if you will. And I'm just throwing that out just for discussion. So I appreciate that response.
Sure. Stacy, you have your hand up next.
Yes, I like the question, Alan, because in the definition it says a network of infrastructure assets is comprised of all assets that provide a particular type of service, and then it goes into components and gives examples of components. And I do think that leads to some confusion, because then people are like, oh, I'm thinking of the components now. So if there was some examples up there of maybe it's the activity, like you're saying, this transportation, things that move people and things, or electric utility, water utility, sewer utility, and that helps with that definition. Maybe definitions in here would be fabulous. Of a network is the assets that help provide this activity, and I know it says service of government, but the service of government such as the transportation activity. I think that would be very useful in separating what is the network versus then the components of the network.
You, Stacy. Next is Lisa Marie.
I appreciate, Alan, your comments, because for the water authority, we wouldn't consider the whole water delivery system as one network because we have storage, which is separate, and then we have our water delivery, then we have treatment, and then we have the whole desal thing, which is completely separate. So it would be, we wouldn't necessarily assume one system, so it would be helpful because we would appreciate some clarity around that.
Because Lisa Marie, that's the question on the table, right? Is what's the right level of aggregation or disaggregation to get everybody talking about the things consistently, right? That's really what
Absolutely.
that's what I was poking at a little bit, right?
Yeah, no, I appreciate that because we actually have different dollars in buckets separated by those.
Fair enough.
Thank you. And so just making sure, I know we heard from everyone. Before we wrap on question 5, do any of the board members, anyone else have anything to add or ask on divide by network before we move on from this question? All right, seeing none, we're about halfway through our time today, and we are also just a little bit about halfway through the questions. So I think now would be a great time to take a 10-minute break. And we will come back. Let's come back at 3:03, and then we'll come back to talk about question number 6. All right. Thank you, everybody. And welcome back, everybody. Let's give everyone a minute here to get back in. And I think we have, bear with me one sec. I think Jackie in the lobby. So one sec here, guys. There we go. All right. Okay. We are back. Thank you, everyone. I know this is a long discussion, so I appreciate all this great feedback we've had so far. We have a couple more questions for the rest of this afternoon. We're going to be moving on to question number 6, which is related to disclosures about infrastructure assets that have exceeded 80% of their estimated useful lives. So paragraph 11 of the exposure draft proposes to disclose the historical cost, accumulated depreciation, and historical cost weighted average age of infrastructure assets reported using historical cost and of accumulated depreciation that have exceeded 80% of their estimated useful lives. That information would then be separated between those that are fully depreciated and those that are not, essentially those that are more than 80% but not fully depreciated. Additionally, this information will be provided by network of infrastructure assets. So that gets us to our 6th discussion question today, which is, what feedback do you have about the proposal to disclose information about infrastructure assets reported using historical cost and of accumulated depreciation that have exceeded 80% of their estimated useful lives? And when I look at our list and how we've done this today, Lisa Marie, if you wouldn't mind kicking us off for this one.
Sure. I mean, it goes back to my comment before about if we could also make sure we consider condition as well, in addition to the actual percentage of useful life as a part of the consideration. Thank you.
Thank you. Thank you, Lisa Marie. Next would be Sean.
Thanks, Joe. One thing that one question that comes to mind is what is the implication of an asset being 80 to 100 or 80 to 99 and then 100% fully depreciated? And maybe it gets back to the next question, which has to do with the policy. So if there's an abundance of assets that are fully depreciated, maybe one point of clarification would be separating, I don't want to create extra work potentially, but how many of those are going to be replaced? So if we have a lot of fully depreciated assets that are still in use but won't be replaced, then maybe segregating that out from other assets that will be would be meaningful information to the users of the financial statements, and potentially disclosing that in the policy related to the next question. One other thing that comes to mind too, with in particular electric utilities, is there may be some regulatory guidance that or requirements that we are bound by in terms of asset classes and useful lives and so on. So again, to the extent that we are required to follow those asset classes and useful lives, then the percentage of assets that have 80 or to 100 or fully depreciated maybe has a different meaning if we are required to abide by useful lives from a regulatory perspective. Anyway, that's my thoughts. Thanks, Joe.
Thanks, Sean. All right, moving on. Gary.
Yeah, again, being on the modified approach, don't have much to say about on this one.
All right. Thank you, Gary. Then we'll move on to Stacy.
We agree with the proposals to report the 80 and the 100%. Not sure where we got 80 from, and just looking at how long-lived these assets might be, is a higher threshold more appropriate, maybe like 90% instead of 80%, just since there's no really guidance or disclosure on how 80% got picked. So that would be nice to maybe relook at the levels, the 80% and the 90%. But no concerns with reporting them separately, since it is helping in the audit world of what are we getting to for fully depreciated, and then also what are included in the fully depreciated, fully used by estimated useful life assets, and wondering why those are not being evaluated. Are they going to be replaced? What's the replacement plan? Or does the estimated useful life need to be adjusted? Thank you.
Thank you, Stacy. Next is Cameron.
Yes, do agree with the having those breakouts. I will say, and looking at I spent a lot of time with in section C1 looking at the example that was provided for the kind of how things were broken out and how the disclosure for the historical weighted average would go. From a personal level, I'm not really sure what we're accomplishing with calculating the historical cost weighted average age, especially if you're only pulling out just those two pieces that you can already see above that are already over 100%. And again, this is for me personally. I'm not sure what additional information are we providing something that people want to use, I guess, and is that something that would be usable by your average user? But in terms of highlighting the fact that you have a network of infrastructure assets and the age of it, I think is legitimate and is good to be included.
Cameron?
I'll move to the top of the order. Bill.
Yeah. Can you guys? Yeah, I froze there, at least on my screen. So, and I guess I almost want to ask Alan a question, but maybe he'll comment at the end. If I understand the disclosure requirement to be done at the network level, then this is asking for more detail than is already going to be in the footnotes, of much more granular potentially detail than what the footnote disclosure would be, because you're not asking for it at the component level, correct? You're asking for it at the quote asset level, whatever that is, and that would vary between entities clearly. So I guess my thought is, what is the clarification on that? And again, I don't know, the value of having it when you're going to do other things like talk about maintenance and things like this. So I personally don't follow the value to this to the reader.
All right. Thank you, Bill. I will move on to Richard. Richard, you're on mute.
Thank you. I think this is an important topic. I think from the standpoint of many users is that, and actually when I go in circles and talk about it, infrastructure, everybody likes to bring up deferred maintenance. I know at least among some of the comments, from the user standpoint, what about that as a liability? And I initially thought that too. I understand about what a liability is, and there's no third party here, and there's no scheduled maturity date. But we all know that when you're in the area of maintenance that's well past what it would be a safe level, or a reliable level. That's what we're really concerned about, because of the probability that you're going to have to spend a lot of money, whether it's out of current funds or whether it's from a bond issue, whatever it is. Quite frankly, if something terrible happens, it could be an immediate need to address the issue. So we want to know that deferred maintenance. Well, we're not going to get it. It's not here. It's not anywhere in my report can I say I have a precise number on deferred maintenance. However, when we're dealing in the area of 100% fully past their expected useful life, we're more vulnerable in that area. And, might say that we're more prone to have, if the estimated useful life number was right, you're more prone to have deferred maintenance. And so this is the closest thing we're going to get to a deferred maintenance number. Now, we realize, and we're not advocating to call this deferred maintenance, but we do understand that it's more likely that if they have a very high percentage of their assets in this categorization and their estimated useful life estimates were correct, then we have a problem on our hands. And as I talked about being an elected official when I came in, and we were a relatively wealthy suburb, and yet we had all these infrastructure problems, which has been proven and now been addressed. But the fact is that the people that were elected were responding to a belief in the power, the power of the community, circles of the community, that we wanted no debt because we wanted no more taxes. We wanted to lower the taxes, which we did, and we had no debt. And you can see there's a consequence to that. From a credit analysis standpoint, there's a cost to that too, because you may come in with great debt ratios, may come in with low tax rates, and yet you've been deferring this issue. But it eventually will come due, and we all know that. You're eventually going to have to pay it, and it's going to be more expensive to pay it down the road. That's what we're trying to get at, and that's the credit risk. Will users like this? And I saw in one of the comment letters, they said, why would anybody want this from the user standpoint? Or they suggested they won't use it or don't. I think they will. I think it'll be used a lot. And there's I think a carrot and stick here too, because the stick is that if you have a lot of assets that flow into the fully retired category, you're going to be penalized in the markets down the road on that. And that gives them a carrot, you might say, to get their estimated useful lives to be more accurate. Hopefully not manipulated. I assume that wouldn't happen. I think the honest people that come together are going to try to get it more accurate. That's what we're trying to achieve, because they found now an incentive to take the extra time to think about it and do those periodic appraisals of their assets. But we have a lot of cities that came out in the study in which have a very high percentage of fully retired assets. And when you're looking at that accumulated depreciation number, some of that is partial depreciation of active assets that have plenty of life left, which we don't worry about. They do have to be replenished, the portion that's partially depreciated at some point in time. From an economic standpoint, that's why they're in there. But the part that we're concerned about, what about all those assets in the accumulated depreciation that are in there that are fully retired? And we did look at those numbers, and you can see that those numbers point to many governments, most of the governments around the country, having more accumulated depreciation than they have depreciable assets. Not a good thing. Okay. So we want this in here because it's important and it's the best thing you can do in a simple accounting way to put it in there. And I think you'll find that the users use it. The 80% rule is a warning track. It is somewhat arbitrary. If you went to 80, 90, that's fine. I think the most important one is 100, but 80 to 90, who's going near the warning track is really helpful. So I can give you a very passionate answer as to why we like to see this happen. And to those that are doing their job, it's good news because they're going to be rewarded. Those that are not doing their job, they're going to have to be accountable for it. They're going to have to, and we want, many towns, and this is the last thing I'll do on my little bit of mini speech here, because I think it's a crucial issue for GASB, so I'm spending some time on it, is that what you find is a lot of old industrial towns of all sizes. They put off some things they shouldn't have done while they were rich and doing well with their industrial base. And then when the industries went down, people left. They have a shrunken tax base now. They can't afford to address the issues. That's not what should happen. You should put everybody on record of what they're doing and how well they're doing it, whether they're in good shape or whether they're in bad shape. But hopefully we'll prevent more of those that will become in bad shape, kind of inhibit that number from getting larger. So that's the reasoning for doing it. I think there is a dollar weighted average value in our database in this data world. I can tell you, we're using it now. And I would hope that you'll keep that in the rules. So with that, it's again, hopefully now that's the last of my long answers. But I want you to understand why I feel so strongly about this and what you're all doing and contributing to. I'm sympathetic. I know it's a hard job, and we're not impatient. We're patient about getting this done and getting it done right. And that's the most important issue of all, getting it to the right direction. Thank you.
Thank you, Richard. Next on our list would be Jody.
Thank you. I agree with, I should say we, the expert panel, agree with Bill that there's some confusion about the level that this disclosure is supposed to be at. So paragraph 6 talks about certain components that need to be considered and reported as separate infrastructure assets for purposes of depreciation and disclosure. But then paragraph 11 requires disclosure by infrastructure asset network, and then the illustration in Appendix C appears to present the information at the network level. So we think it's unclear whether the board intends the 80% and 100% determinations and the related historical weighted average age calculation to be performed at the network level, at the individual infrastructure asset or separately depreciated component level, or maybe the asset and component level with amounts aggregated and disclosed by network. So if the board does intend the disclosure to be calculated at the network level or aggregated at the network level, as paragraph 11 in Appendix C appear to indicate, then we have concerns about whether a single network level weighted average age would provide meaningful information when the network includes assets or components with substantially different estimated useful lives. So, and more fundamentally, we question whether historical cost weighted average age even provides meaningful information to the users at the level that it's being proposed right now. The proposed disclosure would already provide historical costs and accumulated depreciation for these infrastructure assets that have exceeded and reached 100% of their estimated useful lives. So it's less clear to us what additional analysis users would be able to expect to perform based on a single weighted average age in years, particularly again at the network level disclosure. And then our concern is that the example calculates it using 9 assets, but this calculation could get extremely difficult and complicated if a government has hundreds of assets in their networks. So we do question whether this additional calculation is worth the work involved.
Thank you, Jody. And then last on this topic would be David.
I think we think this is a very useful disclosure, assuming the inputs are correct. On the usefulness, having a sense of, kind of the scale of the infrastructure assets that either, should be replaced in the near term or that will be on the replacement pathway, over kind of the immediate, medium term is incredibly useful for understanding kind of fiscal implications of the infrastructure management policies of the state or local government. The 80% versus 90% versus 80%, or 10 years, whichever is coming first, or some other measure. The main purpose as we see it is like what's coming due, and I think you can kind of slice that differently and still have a good answer. And then on the input side, right, the point of feedback that the GASB received is that many jurisdictions have assets that are still in use, are still in good shape, are still in good condition, but are past their useful lives. And I think all of the conversations and efforts around thinking about how to make the remaining useful life more accurate through periodic reviews and restatements, through having a more formalized process for renewing part and preserving parts of the assets or componentization, all are important and necessary steps to make this disclosure valuable. And so we appreciate the effort being put into thinking this through. Oh, and sorry, two other one. I likewise do not want to create work for other people, but I do think that to the extent there is a meaningful share of the assets beyond replacement or beyond useful life that are not going to be replaced, noting that in some fashion would, right, if we have 100 million of assets that have exhausted useful lives, but actually it turns out 30 million of them are things that are not going to be replaced, and there's not going to be a future fiscal burden because you're not replacing them. I think that's, I don't know the best way to note that, but having that information would make this disclosure more valuable. And so I could see that. And then to Lisa Marie's point, I think as we think about how to make for jurisdictions use the modified approach, right, if you have the full on condition assessments and an asset management and lifecycle management process, trying to make the modified approach a viable way of reporting using condition targets and condition goals and state of good repair objectives. If you have that as your available inputs, I think that can tell a more complete story than remaining service life. But that I think gets to, the historical cost netted depreciation disclosures are going to be good at some things, and the modified approach will be good at other things.
Thank you, David. And I think Bill's right out the gate with it, because I have, the next question is, would anyone like to follow up on what they've just heard or add to their prior comments? I think, Bill, you had your hand up first, right?
Yeah.
All right.
Well, I don't know about first because I can't see everybody, but I did have my hand up. I do want to, before I don't want to get, I wasn't trying to get on Alan, but and I know the GASB always feels penned in when they do examples like they did here. So the examples are appreciated, but I think it does create that confusion about the level of detail. And then the concern that I have is, this is, as always with examples, they're meant to be simple, to be illustrative, and hopefully meaningful. But whether people have the components of infrastructure broken out in a way which would enable that kind of presentation is the concern that I have. And I think that would be a lot more complicated than folks think, from my vantage point, from what I've observed over the years.
Alan, did you raise your hand to respond to that?
I was going to, because Bill said something earlier and I didn't say anything, and then and it's fine, it's totally fine. I do think, Bill, there is this idea that you're doing this 80% and 100% calculation by infrastructure asset at whatever unit of account you currently record your infrastructure assets. So you already have your infrastructure assets in a spreadsheet or in an asset management system somewhere at some unit of account, whether it be mile of road or project, whatever it is. The board would think you have that. And so you're doing this calculation at that level. You're then just disclosing the assets that are over these two thresholds, but you're aggregating them by network. So you're not going to disclose the illustration C. If you realize the illustration C, the only thing that's actually in the illustration is the actual paragraph that's on page 25. The other stuff is just information the board put there really to help folks understand how to, sorry, on page 26. The other stuff is just information people put there to help them understand how to do the calculation of the weighted average. So all you'd really have is that paragraph. And so I do think it's important to say that you do the calculation by asset at whatever level you currently keep your assets. Don't change it. And then you aggregate the things over 80 and the aggregate the things over 100 and disclose those by network at whatever level of network you decide to do your disclosures at, which we talked about that earlier on, right? And so in this case, you have, in this case, you would do it at that level. I don't know if that addresses your answer, Bill. I hope that kind of hopefully answers your question.
Yeah, it does. Again, I just I think it was I don't want to point out the wrong. Somebody mentioned earlier about kind of the way they do it, like with pipes, right? And she replaces the pipes in pieces. So like that's a continuing, ongoing process. And I've seen this. Like I can remember I did an electric utility years ago, and what they would do is they would do replacement by year, and they would put on all the capital infrastructure that they would do every year, and they would peel the oldest year off by number of years or whatever it was, right? So they had a systematic approach to updating and refreshing, if you will, right? So
and Bill, that's a great example, and I'm going to say a couple of things. I'm going to let everybody go because I don't want to hog this, but some folks might do it by mile, some people might do it by project, some may do it by a lot of other different things. We've tried to be very, very careful. The board's tried to be very careful of not trying to dictate what that unit of account is. Because if all of a sudden I told Lisa Marie she can't do it by mile of pipe anymore, I told her you were doing it by project. I think Lisa Marie, you're saying by project. I said you can't do it by project anymore. And usually the projects are an annual thing because it's related to the budget. And you can't do it by product anymore. You got to do it by mile of pipe. That would create a large change in how she thinks about it. So Bill, we're not really trying to do that. We're trying to allow people to keep it at whatever level they keep it at, because I think governments, there could be 5, 10, 20 different flavors of what their unit of account is right now. And so we're trying to leave that. So the math, you might have a spreadsheet that has all this math to calculate what's over 80 and what's over 100, and then a spreadsheet that calculates your weighted average cost. But then you're going to aggregate those things over the 80 and the 100 into your network to then show it in the disclosure. I'll give you a perfect example of where this is relevant. We use it all the time. One government, 2 water treatment plants. One's 60 years old, but an average life of 40. So it's 20 years past its useful life. The other one is 10 years old with an average life of 40. Right now, all the user sees is water treatment facilities half depreciated. They wouldn't know they've got one of those facilities that's 20 years past its useful life. And this disclosure would give them that. And that's the purpose of this disclosure, to give those users the ability to see that no, it's not water treatment plants 50% depreciated. It's water treatment 50% depreciated with one of those assets being 20 years past its end of its useful life. And then what the cost that is, and so theoretically what you can inflation adjust it. But I think that is important, that the idea is the analysis is by asset, the disclosure is by network.
Keep moving, I guess. I think Stacy, you are next.
So Bill started it. I had other things, but I want to, with Bill's comment is, this is where the confusion is. So if we're reporting by network and we're saying water network, but now this note from what, if I understand what Alan's saying is correctly, is the component within that network. And that's not exactly what paragraph 11 says. So if we are wanting to look at the reporting of those components that are at 80 and 100%, and then calculating that historical cost weighted average age, it should be very clear in the paragraph that we want the component.
Stacy, I hear you. But what we're saying is networks are made of one or multiple infrastructure assets, not necessarily one or more components. I understand that word. We might need to get laser focused on that word and where we used it or didn't use it. But think about your road network. I'm just going to make this up. Think about your road network, but your road network is comprised of 10,000 or 1,000 projects you've done over the life of the roads, and each project is an individual capital asset in your asset register. So you're doing the calculation by project, which is, in my mind, each individual asset, right? And then you're going to do the calculation of those assets and then roll it up to your road network. Does that make sense?
I'm tracking you, but what I know is that we're using a lot of the same terminology to different things. So
and I hear that part, and we probably need to go back and think about that, because I hear that part what you're saying.
Because I understand where we're trying to get, and it is being real clear in this is because the example said, the example shows, but it's using the right words to put in the paragraph of the standard to get to the example. So I do see where that's the confusion, and maybe that's just the takeaway is there's the confusion of the multiple terms and getting some solid definitions, and then maybe having like a catalog of the definitions.
Stacy, yeah. The board acknowledges that, and our fix for that, what we tried to do, and I guess we didn't do it very well because this came up in the letters. The answer is actually in paragraph 6, where we define components, and then we say in paragraph 6 that component should then be considered a separate infrastructure asset in the determination of depreciation expense and for purposes of the required disclosures. So yes, we try to stop there and not use the word component anymore, because once you've broken an asset into multiple components, or 2 components at least, now they're separate infrastructure assets. And everywhere else beyond that we talk about infrastructure assets, we're talking about now anything that was broken out and componentized separately. That's where we tried to fix it. Might not have worked very well, but that's what we tried to do.
That makes sense. I think honestly, just continuing to call them components would be appropriate, because we think infrastructure assets is a category of capital assets. And now we have the network within the infrastructure asset category, and then to call the component back to infrastructure asset, it kind of rolls it back up. I'm seeing how we're getting there. This is just not how people are reading it. So I appreciate the problem we're having with words. I don't have a solution, but just commenting on that. But my other one, I completely looked over my comment on the historical cost weighted average. So I appreciate those. That reminded me that I did have a comment on that. In our letter, which I'm sure that you all have, we put that we strongly disagreed with this proposal of the disclosure. And in further research of the historical cost weighted average, like what is this? How do we get to it? What is the value of it? I would like to say that SAO, once I can present this to my group, we wouldn't strongly disagree with it. I am understanding the value of it, and I'm understanding how we're getting to it as I dug deeper into it. And I just would recommend that the footnote of the calculation, like how to get to this calculation, actually be just up in the standard. And part of the implementation, there's education out there to governments and to users and to preparers and auditors, everybody. What is this number, and why is it so valuable? Because I come to realize why it's so valuable to those that need it. It's just not something that is very common in the preparer and on our side, the auditor area in Washington. So I was like, what does this number even mean to me? But upon further research, I've arrived at it. So that's just my suggestion. Let's take it out of the footnote, move it above, and let's really educate the community on it if this ends up in the final standard. Thank you.
Thank you, Stacy. Next in the follow-up feedback order is Cameron.
Well, unlike Stacy, I have not looked up the historical weighted average or the need for it because that is one of my questions, and I will actually go back and look that up. So I do, and I misunderstood. I thought when I looked at the C section, I thought that this was all of this was going to be part of the note and not just that disclosure paragraph at the end. So that helps because I did feel there was a lot of redundancy there, which I was kind of wondering about, but that's helpful. Again, though, I do, and again, I know this example is very simple so that it's easy to understand. I'm just trying to understand where, telling somebody that they can see that we have got one, in the example, two roadbeds that are over life, and we average them, and they find out instead of it being 34 years, now the average life is 32. I'm not sure what we are trying to, or how we're benefiting the user with that.
But Cameron, can I ask a question?
Sure.
This is not fair because I'm asking it to you, and it's not fair I'm asking it to you. So not directed at you personally.
Sure.
But if the theory is we have these on a historical cost depreciation basis, which in theory means they're going to get to an end of a useful life. And when they do, we need to replace them.
Right.
Okay. And if I'm a user and I'm making the assumption that when that happens, you're going to replace it, I want to know what you're about to spend to replace it.
Gotcha.
And I've heard a couple people say that, well, if we could separate the stuff we're not going to replace. Well, if you've got infrastructure assets you're not going to replace, I'm not sure historical cost depreciation is the right method to be using. You probably should be on the modified approach. But we don't force people to do that.
Right.
Right. And so what we've got this really weird juxtaposition with folks treating the assets as non-replaceable, never going to get to its useful life basis. And that's how they maintain them. But accounting for them as if they're going to get to the end of useful life, and therefore you need to replace them. And that's what the users are trying to figure out: is when does that check come due, or is the check coming due? And we didn't want to say everybody use modified approach because there'd be cost constraints and things with that. But what I'm kind of hearing is, but I've got these depreciable assets that I'm not really ever going to take out of service. Right. There's a little bit of a contradiction there, right? And I don't know how to. I guess the question is, how do we solve that when the users make the assumption if it's being depreciated, it's going to get to useful life and have to be replaced? That's the assumption the users make. There's users on this call. I shouldn't speak for them, but I believe that's the assumption the users make.
And how do we let the reader know that no, these assets are lasting longer?
That's when couple that with, and I'm not picking on anybody, maybe we haven't done the best job of actually resetting these useful lives on a periodic basis. And so we've got a little bit of set up and forget it scenario going on. And how do we best give the users some information they want without overburdening everybody? It's kind of a balance between giving them what they need versus too much cost. And this weighted average was kind of a compromise, I think, by the board to get us into a middle ground.
Give them something else to use.
It gives them something they could use. They can do whatever they wanted to it, inflation adjusted or whatever, to give them some idea of how big is this thing, these assets that haven't been replaced.
Gotcha. Thank you.
Next is Lisa Marie.
Sure. Thank you all. Again, this has been a great discussion. And Stacy, I really appreciate your comments. As an everyday user, I do appreciate the notion of having a catalog of terminology, because ultimately compliance is the key. And I do believe we do need these level of disclosures. And I'm a big wholesale water agency, let alone my smaller water agencies that are managing these assets. And I also appreciate the notion of potentially having some level of education so that we can ensure compliance. So I think that's something just that we have to be processing and think about the level and the type and the size of the user and make sure that there is compliance, and whatever we can do beyond just setting a standard to help with compliance, I think is going to be helpful.
Thank you, Lisa Marie. Next would be Bill.
I guess I would caution, I think if I put on my finance director hat or whatever you want to call it, right? And I'm sitting there and I'm getting ready to do this evaluation. I probably start doing this evaluation on my periodic review date, and therefore I would probably modify my lives at that point in time so that I wouldn't have little or no assets that would meet the 80% threshold to be reported potentially. And maybe, not even doing anything necessarily inappropriate or incorrect, right? But just from a standard that, well, the road's still there, or the pipe's still pumping, or the electricity's still flowing, right? Whatever it might be, that the things are still going on. So I don't know that, having this laid out to do this assessment will get you maybe again, I think I opened with the idea that what I hear the market saying, or the investment people that use these statements, is, hey, we want to know, what the potential condition is, or what your costs are going to be. And I think the gentleman mentioned, hey, this note could be positive to you essentially if you don't have it, but maybe looked at negatively. So you're encouraging potentially the users to make it so that they don't have this type of disclosure.
Thank you, Bill. And then last one before we turn it over to the board, David.
Yeah, I just want to clarify what I was talking about with infrastructure assets that are not going to be replaced. And here I was trying to disaggregate between, when we look at the assets past 100% useful lives, like our natural understanding of this was going to be, well, okay, all of these things are going to be, you're going to need to pay a replacement cost for them because you still want to bridge over this river, you still want a road to this location. But it may be the case that, your jurisdiction is going to be trying to shrink its road network or shrink its bridge network and find redundancies. And so maybe there's some assets there that when they're no longer functional, you're just not going to have a bridge there, and people are going to have to take longer routes. And to the extent that that's a meaningful share, kind of disclosing that in notes will give the user, I think, a more accurate picture of what the assets past useful lives, or assets past 80% of useful lives, is telling us.
All right. Thank you, David. Oh, all right. Last one, and we'll, Richard.
Yeah, my only addition and is to that point is to Bill's point, is that I don't want to just know, what's going to be remaining. If there's going to be remaining and you're past your estimated useful life, I want you to tell me why it's remaining, because you've determined that it's in better condition than you thought, or whatever it is, reasons are. But in the shrinkage of the assets, it's fully justifiable if you feel you no longer need that bridge. So just make sure that it's just not a number, that if they do that, that's a footnote point, and they got to explain why they feel that these are still useful.
Thank you, Richard. And before we move on from question 6, just want to open it up in case, do any of the board members wish to follow up on what they heard regarding disclosures of infrastructure assets that have exceeded 80% of their estimated useful lives? Lisa.
Remember to turn on my speaker, my microphone. So in terms of the weighted average age and the usefulness of that, I think that in combination, right, if we're getting the review or the componentization right, you get the review so that you're adjusting what that useful life is, and then you come up with the weighted average age. I think that it's already being used in your, like, a lesser version, right, is being used in the framework that you've developed in terms of figuring out when you inflation adjust your number, which this would be arguably a better number to inflation adjust to get to what those replacement costs would be. And that the 80% it's a single for users to know that there is some level that, that you're approaching potentially large costs. Am I getting that right, Rich?
Yes,
it's already
exactly.
being used.
Yes, because we have to use an imputed number right now, which is basically the conventional financial analysis ratio in both corporates and munis for estimated useful life and average age. So we're using the average age based on conventional analysis.
So the changes that are being made would be helpful in getting the numbers being used.
That's our goal.
Right, because I think that what's great is that we are starting to see development of tools to to actually get, some sense of what the numbers are. And so anyway, I just want to make
Yeah,
sure
I
I'm
think your
getting it right.
comment's very good. I think as long as you understand what we're trying to achieve, and I think you do, and also I think Alan did too. His comments that he made seemed to understand where we were going with this. So there is a usefulness, when you have them and using it for when it's not conventional practice to really apply the depreciation numbers. The most common line that's always used is "Don't worry about it; it's just a paper item." And I think we're past the point where we should be saying that. I think we're finding out that these issues really do matter, and therefore we no longer just treat these things like depreciation as just, "Oh, don't worry about it; it's a paper item." Thank you.
Thanks, Rich. And Joe, can I ask one more question? And just kind of maybe showing my ignorance, but I think Lisa Marie, you had mentioned that condition should be part of the assessment. And I was wondering if you are periodically reviewing your asset for the useful life, is condition not implicitly being taken into account? Am I missing something there?
No, absolutely. I just don't want to necessarily, as a user or my smaller users, be bound by language in a GASB statement. That's what I'm concerned about.
Okay. Thank you.
All right. Well, we are going to move on to the next topic. This is going to get us into question 7. It's about policies for monitoring the maintenance and preservation of infrastructure assets. Paragraph 10 of the exposure draft proposes the governments with a policy for monitoring the maintenance and preservation of infrastructure assets should briefly describe that policy in notes of financial statements. The board believes that such a disclosure of a government's policy in this regard is essential information that will let users of financial statements know how a government determines whether maintenance and preservation expenses should be incurred for its infrastructure assets, and would also provide users with essential information for assessing the government's accountability for services it provides through its infrastructure assets. So question number 7 is, what feedback do you have about the proposal to briefly describe policies for monitoring the maintenance and preservation of infrastructure assets? And by way of order, Sean, if you would kick us off.
Thanks, Joe. I think I agree completely with the spirit of what we're trying to do here. I think one of the potential unintended consequences, though, is that if a government is not doing a good job of monitoring, including funding of maintenance and preservation, then they're not going to adopt a policy that says that if they have to disclose that policy. Whether I think so. Again, I think the one of the potential outcomes would be that governments would not adopt a policy if they knew they had to disclose it. So, my recommendation would be that this be a required disclosure. And as a preparer, I'm not a fan of negative disclosures, but I think if the governmental entity didn't have a policy requiring that to be stated in the disclosure, would be a good idea. I think that was all the thoughts I had on that item. Thank you, Joe.
Thanks, Sean. Next is Gary.
Yeah, this is I'm going to save most of my comments for the next question, but this is something we have adopted. And to Sean's point, we do address what our policy is and how often we assess all of our state assets, and we do break them down. We do bifurcate our roads versus our bridges, and we do bring into account how we're assessing them. We use the IRI data, and we use ranges of conditions, and towards the end we do have an estimated spending and what our actual spending was, and we do incorporate that into our notes every year. Other than that, I'm going to save the rest of my comments for the next question.
Thanks, Gary. Moving on to Stacy.
Thank you. We had some more confirmation, which I believe has been answered, but to be clear, The maintenance and preservation of the infrastructure assets has historically been tied to the modified approach. So we've had some of our historical cost governments comment on, well, why do we have to do that? We're not doing modified approach. So it was unclear of if this paragraph was related to both. It sounds like it is. Regardless, what we thought was that those users under the modified approach, adding the policy information with the RSI schedule that actually talks about their estimated maintenance and preservation costs compared to the actual, and have that all be in one place, though I understand it's a policy, so it makes sense to have it in the SSAP. And we know if we give them options, it ends up all over the place. So I guess wherever we pick is fine. And just some clarification for those with the historical cost approach that, as Sean said, if they're given the option to maybe have a policy, they're gonna opt not to. So if we do feel this information is going to be extremely valuable to our users, potentially say, like, you need to tell us what your maintenance and preservation process is if you don't have a policy, something like that, so we can get that information and maybe even help the community that's looking for some of that deferred maintenance information. Like, their plan is to do this. Well, if they're not doing that, that means this is going to happen. So maybe if they don't, in lieu of a policy, tell us what your plan is, kind of a thing. I think that's it. Thank you.
Thanks, Stacy. Next up is Cameron.
Thanks, Joe. So we do agree that that having a policy is a good thing. Ideally, I think it, as some of the other people on here have mentioned, that it kind of loses some of its teeth if you're not requiring it, and that and if an entity decides, oh yeah, well, it's better not to disclose anything rather than adopt a policy. Now, I understand you get into trouble, and speaking from a bigger entity where we have lots of infrastructure, that is makes more sense. But at a smaller entity or a small city, county even, it might be a bit more difficult to, or again, it's not something that is, I don't know, very relevant for them. But should they be required to create a policy even if they have very little infrastructure? I understand that there is an issue there, but I do feel like asking people to disclose it if you have it I'm not sure we're going to get the intended result, or if the information that would be provided, that somebody might not. My other comment would be that the monitoring of these networks, of different networks, the assessment of the maintenance and preservation costs could be you could have a very different assessment of my roads versus my internet cabling or something. And so would you have to have a policy discussing each of your networks and how you assess those maintenance and preservation costs on each of the networks? Or do you just have one policy that's very generic that covers all of your different networks, even though your process could be significantly different? That's it for me.
Thank you, Cameron. Next up is Bill.
Yeah, I mean, a policy is always good, right? I would go back to the fund balance, where many clients had to go and modify their policies for the different categorizations of fund balance and what they could or couldn't do within those categorizations, and ask the board to consider the implementation timeline as well as outreach, because again, the different levels of governments are going to do things differently. And if you want compliance with this, you need to give people enough time. There's generally a process, obviously, that governments have to go through when they do create a policy, assuming you wanted at, I would assume, a board at an official level to make it really impactful, if you will, versus a management policy. So please consider those things.
Thank you, Bill. Richard.
For these types of things, I'm always glad to keep it simple. That's in brief, etc. I'm not a fan of boilerplate, but sometimes they have to be somewhat to keep it simple, to the extent that it's not causing any anomaly with expected practice, conventional practice. But I'm more interested in the disclosures relative to changes in policy or or let's say that you're now going to change it so that you're going to have your roads now being put down instead of lasting 40 years, you're going to go to 75 years. I certainly like to see what caused you to say that you're going to do that, whether that's here or somewhere else. If it's here, this is where it should be. It should be expanded on, but that's generally my thought process.
All right. Thank you, Richard. Jody.
Thank you. I don't think I have a whole lot new, but just kind of want to summarize where the expert panel is coming from. So we don't object to the board's proposal to have this in the footnotes, but we do think the board should clarify what constitutes a policy. So is it just a formally documented policy? Is it informally adopted policy? Is it an informal but consistently applied approach? Would that be considered a policy? And then what do you want to do if a government doesn't have a policy? So right now, the way we read it is if you don't have a policy, there's no disclosure requirement. So if the board would like a government to say, we don't have a policy on, then we think that should be clearer in the standard.
Thank you, Jody. Next is David.
We like data and we like policies. So data on what policies people use is good. I think I think maybe Cameron's comment, I think we'd expect over different infrastructure categories that there'd be different underlying policies. I guess the one thing that we would find valuable if it was added to this is, just like in the pension OPEB disclosures, kind of separate ACFRs by the pension OPEB funds, and the valuations are referenced and described. If for surface transportation, kind of the TAMP and state of good repair reports, for water infrastructure, kind of the relevant SIP reports, or the other additional documentation that producers have available is referenced and then can be more easily found by users.
Thank you, David. And then last up on this topic is Lisa Marie.
Sure, I do appreciate the need for policies, and I agree that if it is required or should be required in a footnote, there is ripple effects to the other disclosures, and it's probably going to be important that guidance, if not from GASB, but for GFOA or different preparer organizations, that the user should then be prepared to disclose this policy in their offering documents and in their disclosure documents, because it could very well be a critical factor or criteria for when they go to market. And so it's not going to just be a GASB requirement once it's implemented. It will have to likely be required in other source documents. And I think that's important for the preparers to be aware of.
Thank you, Lisa Marie. That is everyone on this topic. So at this point, I would like to turn it back over to the participants. Would any of you like to follow up on what you've heard or add to your prior comment on this topic? Stacy.
Mine is more a question. Is there any specifics that we're looking for in this policy? And then if so, could those specifics be included in the standard? And if anybody has the answer, I would love to hear it.
I think that is something we'll be working through with the board this fall, based on feedback and coming back to them. So
great, thank you.
Yeah, you make me think when you ask that question, Stacy, that I wish I could get at the answer of why there's such a high variance on the estimates used by governments when they do these estimated useful lives. Is it due to policy? Is it due to conditions? And that might be related to your question. And do we have kind of as long as it's running, as long as we can still drive on the road, that's good enough. Do we have a good enough policy, or do we have a standard policy that means that we want it to be in the best roads you possibly can have in America or something? Why is there such a huge variance from one city to the other, even in the same region with similar conditions? So perhaps that could be brought out. I don't know the answer, but you made me think of it, and we're going to learn. This is an evolutionary process.
You, Richard. Bill, did I see you? Bill, yeah, see your hand up.
I guess, yeah, if you're going to go down that path as a board, then similar to analogize to the investment policy, right, where you go through and say, hey, there's key things we want to see disclosed related to infrastructure maintenance, things like that.
Thank you, Bill. Before we move on for this topic, also want to turn it over to the board. Do any of the board members wish to follow up anything they heard on this topic related to policies for monitoring, maintenance, and preservation of infrastructure assets? And seeing none, we're going to move on to the next topic, which is maintenance and preservation expense. So the base for conclusions of the exposure draft includes a board member's alternative view that the proposal should include information about the amounts governments intend to and actually expend on their infrastructure assets to allow them to provide services to their estimated useful lives. Though the preliminary views proposed to provide such information as no disclosures in RSI, the board was persuaded by feedback from respondents to the preliminary views that the costs expected to be incurred by governments to separately track maintenance and preservation expenses related to infrastructure assets do not justify the perceived benefits users of financial statements would receive in comparing those expenses to their expectations. So as such, the board did not carry forward those proposals in the preliminary views to the exposure draft. And that gets us to question number 8, which is what feedback do you have about the board's decision to not require governments to disclose maintenance or preservation expense in their financial statements as proposed in the preliminary views? And Gary, if you would kick us off this time.
Yeah, so we've been doing this for a number of years, not so much as a cost of useful lives, but to keep an acceptable range of condition for each of our pieces of infrastructure. And we've had positive responses from both the public and other users. That it's helpful to know, like Alan and Bill and Rich had said, at some point the bill comes due to maintain these assets, and we do disclose within our disclosures. We do add two two charts that show our estimated spending per year and our actual spending to keep these assets within a acceptable range. I think. Like I said, we've done this before in the past. We're going to continue to do this, and we've had positive responses. So we're not going to change.
Thank you, Gary. Next up will be Stacy.
Thank you. We commented on this in the preliminary review and in the public testimony on the preliminary review. So we can always pull those documents and provide them if the board needed them. Our issue with this one for historical cost depreciation method governments is it is highly difficult for them, depending on how their accounting systems have been set up, to track specific maintenance expenses to specific assets. And so we sort of stand on this is really more looking to a modified approach arena, which is sort of coming from me. I've never understood modified approach till I had to start looking into this. It seems to be the better method for infrastructure assets, and having them track related to condition level and then the costs related to maintaining those condition levels seems like they would be able to do that in an easier method than using their current expenditure account tracking method that they're doing related to their capital assets and their capital projects. So we just believe that it will be a really difficult thing for them to do, especially in Washington State, based on our chart of accounts that we have prescribed to local governments. And they're not tracked at the asset level. They're tracked at the function level, like the transportation level, not like a specific road or a specific the specific asset is really what I'm trying to get at. So we do believe it still will be very difficult for the historical cost method.
Thank you, Stacy. Next is Cameron.
Thanks, Joe. We are definitely concur with the board for not carrying that through from the preliminary reviews to the exposure draft. That definitely was something that stood out. I know that the GFOA as well as Travis County provided letters to the preliminary review discussing this actual fact and how difficult it would be. That it's come up in conversations in our committee as well. How difficult this would be, especially for I mean, even an entity of my size, but getting into smaller entities as well. This would have been a very, very difficult thing to do. So I think everybody was excited to not see it there in the exposure draft.
Thank you, Cameron. Bill.
I think the previous folks have spoken to the concerns and the potential cost. And I just reiterate that, yes, most governments would have to overhaul the way their account structure is and how they would apply cost specific to infrastructure to make sure that accounting is accurate.
Thank you, Bill. Richard.
I don't have a strong view on this particular point, so that says probably where I stand. But on the other hand, I'm always, I was surprised that it's a difficult number to capture. Obviously, from a number cruncher standpoint, we always like to have all numbers today in this day and age. You never know how we might be able to view it for some calculation, but I don't have a strong view on this. I think that I am concerned sometimes that I looked at the modified approach. There's only about in our study there was only about 40 cities who used it at all or used partially in it, and I'm just they don't count depreciation necessarily on those assets. And the question, are they a fair comparison with every other city? And I'm trying to make a fair comparison. And the question comes down to, is everyone living up to their own policy and always putting the money into it as they should be? And at least the way you have currently in place here shows at least the expenses year to year in which you're making in this area. So if there would have been a big drop, it wouldn't be disclosed, it sounds like, so we wouldn't know that. So the accountability for looking at modified approach is really rather light. It's really a trust me statement, isn't it? So in the accounting records won't give us much help here. And I'm not sure that's a good way to leave it. But that's all I have to say about that.
You're Richard. Next up is Joni.
Yeah, I don't have anything to add other than to just state that the AICPA agrees with your decision to not require this disclosure.
Thank you, Jody. Next would be David.
We would like this data. We appreciate that it'd be really hard and costly to produce this data for all issuers. So I think we appreciate where the decision is coming from. I'm not sure this is kind of a GASB role, but to Gary's point, I think we look and we see state DOTs have a high level of kind of asset management expertise and proficiency, and how do we bring that level of detailed information to other infrastructure areas and states and to other levels of government, and kind of support them in improving their practices and the data that they have available.
Thank you, David. Next up is Lisa Marie.
I also concur with GASB's board decision not to require this at this point in time, but I will add that maybe in the advent of AI and as governments roll out the use of that tool, and we're the last ones to start beginning to utilize AI, it would make it a lot easier to gather data. Thank you.
Thank you, Lisa Marie. Last up on this topic is Sean.
Thanks, Joe. I would just reiterate our concurrence with the board not including this information. The only other thing I'll add is, if the perceived public value of this information is significant enough perhaps with the long lead time, systems of accounting we would have the opportunity to make the change prospectively, but short of that, absolutely concur with not requiring this information.
Okay. Thank you, Sean. Before we move off from this topic, want to make sure to turn it back to the group for the participants. Would anyone like to follow up on what they've heard or add to their comments that they've already made related to this topic? And barring none, also want to make sure, put it out to the board. Do any of the board members wish to follow up on what they've heard? And Lisa, I see your hand up.
Yes. So based on user feedback, right, the information on the estimated amount needed to maintain and preserve infrastructure assets was actually deemed to be something that they wanted, right, would be very useful to them, so that they could know what, or get a sense of what amount of maintenance and preservation was being deferred from the current period to future periods. And it would provide some insight as well into kind of management practices. So if over time, if you were to see that there was an estimate that a certain amount would be spent and then it wasn't spent, you would be able to get a sense that, that number wasn't being met over time, and you could get a sense of that. I hear everybody that it'd be really difficult and hard to do. And so I'm wondering if there's information that is used by governments today that could provide that type of information, whether that be in budgets or capital plans. I have to imagine that there is something that's being submitted to budget, or, the people that are putting together the budget about what is potentially needed. And then at the end of the day, how much of that was actually funded. Or, Stacy, you mentioned that maybe at the functional level, it would be more, you'd be more able to do that. And maybe that's not perfect, but it would at least give you a sense at the functional level, what's the amount that's being estimated to maintain and preserve versus what's actually being spent. So I just wondered if there's some way or some information that you all think could be provided that could kind of meet the needs of users to get information about, what a government expects that it would have to spend versus what it's actually spending.
So, David, I don't mean to, I'm not skipping over you. I will come back to you, but it looked like Stacy had her hand up in response to Lisa's question. So I'm going to let Stacy respond really quick.
Yeah, I think, as Sean was saying, if there's some lead time, we could realign, like for us. So we have a coding system that local governments have to report to us their revenue and expenditure information. So, for example, our utilities, like our water funds, report all of their operational expenditures to one code. That's it. So everything. So maintenance on a vehicle versus maintenance on their water line they're currently all in one code. We have capital expenditure codes that we track their capital expenses to. So on a summary level, we get that information. Now, in the governments, they make a lot of them have really robust capital project plans, 5, 7, 10 years. They say we need to do these things. These are the projects. These are the budgets to those specific projects. And they don't necessarily always align, as we have learned going forward on a cumulative basis of what's spent to those specific projects and those specific line items, because things change. So I do think that the overall tracking and reconciliation of their budget, their plan, and what actually happens is really complex. And I find that to be the difficulty of them having to track each line item from the original budgets for years to be able to report out on where did those expenditures end. So I believe that's the start of the problem. Not to say it can't happen. I do think it's just a lead time and just a futuristic look on how we can get there.
So Stacy, I appreciate that. And I'm going to steal from Rich, in saying that I can be really patient, right? I think the user groups can be really patient on getting that information. So do you think that over time, it's something that, how much of a lift is it over time to get that type of information?
So thinking of my past, it would have been really difficult. Our accounting system wouldn't have supported that. It would have been a lot of Excel documents, a lot of tracking, a lot of reconciliation. So it would have been a lot of people hours. I know systems are getting more and more sophisticated, but now we're getting into the realm of estimates, budgeting, reconciling to actuals within the capital projects, which currently, as we all know, are not something that's reported out in the financial statements. So can GASB step into that realm to require some actual versus budget reporting on all of the funds, make those all required, so we could start to build toward more detailed, maybe natural classification levels of things. And then also the level of capital asset tracking that eventually we want to get to. So like the componentization, as we've said before, it's great that we want to make that perspective, but we won't be able to give you detailed information on the maintenance requirements and the capital expenditure requirements unless those things are componentized. So we need to componentize them so we can plan when we're going to need to expend on them so we can expend and then report on that. So it's like a step-by-step approach. I think it's possible. It just will take a really long time for governments to move that way.
Thank you.
Yeah, you're welcome.
Thanks, Stacy. I think next hand up we had was David.
Yeah, two things. So first on, I want to say as a user, we can be patient, right? Like, yeah, this is, I think the implementation challenges for a lot of this stuff are real, and it's, if there's a chance to spend a little extra time and wait a little longer and get something that would be impossible to do today, a couple years later, I think that is from where I sit is a great trade. And then on the needs section, yeah, I think let's go back to surface transportation, right? And we could talk, we'll have the next questions on modified approach. I don't want to jump the gun too much, but if you've got an asset management framework and kind of a needs assessment and condition assessment tracking system on the back end through the DOT or through whoever's managing the asset, then that can generate what is your need to get on your state of good repair trajectory that you'd like to be on. From surface transportation, we've got the transportation asset management plans, and they generate funding needs. So connecting that with the financial reporting, and including, for the user, we draw the analysis from our TAMP or from our state of good repair report. Here is our need assessment connected to those lifecycle management goals for the asset. Here is the funding need, and here's the actual funding, and here's the discrepancy between the two, if any. I think that then does get you to what is the preservation needs for this assets to meet policy targets. Though I think kind of you're going to be seeing that if you see it anywhere in the modified approach, and we can talk about that in the next question.
Thank you, David. Jackie.
So my question is to Cameron or Stacy or to Jody, anybody that actually is involved with these governments at a preparer level or an auditor level. On the capital asset plans, I've gone out and looked at websites to try and find, as we're working through this, how many of them actually do these things. And I don't see that a lot of them actually post capital asset plans. I don't know whether that's just they've got them, but they don't want to share them, or what the situation is. And the other thing is, does the capital asset plan go by the wayside based on the annual budget kind of a thing? So trying to get to whether there are other alternatives out there. Are these viable alternatives, or are they just not there yet?
Thanks, Jackie. And I guess, Cameron, I'll turn it over to you.
Sure. Jackie, in response to your question, I know, and again, I'll speak as a practitioner at Travis County as a preparer. We do have a capital asset plan. I don't believe that we post it on any website or put it out there for public consumption. It is typically more the auditor's office isn't as involved in that. It's really done more by our budget office, and then our transportation natural resources. They're usually the ones that are talking and kind of figuring out when we're going to issue bonds for this project and on down the road. Usually, I think it's 5 to 10 years that they usually plan this out. To to the previous question on how heavy of a lift that this could be, and I know Stacy kind of addressed this as well. I mean, I'm just thinking about our system right now and thinking about our infrastructure. We've got a lot of work to do to be able to segregate out our infrastructure and to split out our infrastructure so that we can get it in the proper net, just to get them into the proper networks. On top of that, if we were to then try to tie the maintenance and preservation costs that we do experience to those individual even networks, not individual assets that we have capitalized, but just to the network, the higher level, we don't have any connection right now between those. Our maintenance and preservation, go into a maintenance expense account. They aren't tied to an individual asset. You might be able to tell through an invoice what project it related to or what piece of equipment or whatever, but there is no connection now. So we would have to then, as we're, again, over the next 2 years, start trying to create that connection in our ERP so that when asked to provide that information, we've got it in there already, and somehow we were able to pull that out. But as of right now, I would not be able to tell you how much we spent on maintenance of bridges, in our system for the last year. Could I get there in the future? Yeah. I mean, would it be hard? I imagine it will be, because it's going to be going through a lot of historical data, not to mention what we do moving forward for future costs that we're spending on how we change our system. But to dig through, potentially 10, 15, going back to when we implemented GASB 34, for some of these, that's probably where we're going to start to have to go back that far to kind of dig into that detail. So I expect it to be a heavy lift, and I have a few comments kind of overall. If we have a final section that we can kind of comment, we'll discuss kind of timing of all this as well. I'd like to address that. Thank you.
Cameron. Next up is Bill.
No, I in Florida, maybe most of the governments that I interact with have at least a 5-year capital projects plan. And the vast majority of them do have them on their websites. I did a quick search I was listening, and several popped up. And they all generally have a capital component through their capital projects funds within their annual budgets as well. So definitely the information is there. At what level? My particular concern, not concern, but I think challenge with it would be, is it good enough to identify at the infrastructure asset level or not? That would be the question, because the capital project's probably going to be very broad and talk about larger projects for the most part, not always, but often.
Thank you, Bill. And Stacy.
Yeah. So Jackie, I'll give you an example of how difficult it is for us, even in Washington, to track through a CFP or a capital facilities plan to actual expenditures. So counties and cities in the state of Washington are required to produce I think it's 5-year, it might be 7, capital facilities plan, which is really a capital projects plan, where they lay out capital growth, roads, streets, water, sewer, all of it. And our cash basis governments, we wanted to create a note disclosure that said, hey, this year you reported $50 million of capital expenditures. What's that tied to? And we had several cash basis governments say, well, it's in our project plan. So part of our research was to go to all of their project plans. And well, we're looking at financial data from, let's say fiscal year 25 just ended. That's not available on their websites. That information won't get updated until they go to update the plan. So it's not readily available information. It's what we discovered on all of the governments we pulled up. So we went back to that group and said, it's not available in your capital facilities plan. It basically says you're going to spend maybe $300 million in the next 5 years, but that doesn't tell me what you're spending in 25 or 26 or 27. So we could not reconcile to report information that was out there in the public that was reportable. So we are going to ask them to explain to us what their capital expenditure is. And it's not easy, that their stuff is not tying across the different divisions, is what we found out.
Thank you, Stacy. Next up is Richard.
I think Lisa's question got a good response and good discussion out of this because of the underlying, I think, need. The point I think that I'm gathering from your question, Lisa, is how do we make sure that this modified method is not used, I guess, as a means to avoid being accountable? And that's what accounting is all about, accountable. If I go back to my public administration graduate school, I think that you're always trying to find ways to measure the effectiveness and efficiency and use numbers. And so when I said that wasn't too sure that how strongly I felt about expenses per se, expenses are not always by itself a good measure because you can inflate expenses and still not get a reliable outcome. But I do think that my mind is working now overtime on your question is that, I don't know that it's going to come up in the next question on modified approach, but what level of accountability is there in the audit that, let's say we're talking about a public power plant or a water treatment plant or something, that we're under investing in it so that it becomes unreliable and not doing its job. What do we have in the document that will be a mechanism to get the kind of information you need that both governments or elected officials themselves can see how this has been reported on and measured for its effectiveness? And to some extent, to a large extent too, we're given a pass from the investment side because they don't have an estimated useful life test here. I mean, as much as there's imprecisions in that, we're trying to make it more precise. But the estimated useful life is saying that, we're getting some idea from a metric standpoint of how long you expect this to be reliable. And, we know from owning cars or houses that it's not a perfect measure, but we know when we got an old car, we're going to have more problems in the shop. And so it's still a measurement. What kind of a measurement do we have when assets are going through the modified approach? And I'll leave that as a question rather than an answer, because now I'm wondering. Thank you.
Thank you, Richard. Let's move on to Lisa Marie.
Just real quickly, I did want to share that the Water Authority, on a regular basis, we do have a Water Authority Facilities Master Plan that shows all our assets, what the useful life is, and how do we plan to replace or maintain the system. And then for the general market users, we have a long-range financial plan where we look at over a 10-year period what our CIP needs are, but what are our proposed or forecasted rates and charges and operating costs to maintain the entire system. And that is put on our website.
Not on the audit though, Lisa, right?
We do incorporate some of the data into the ACFR, but you're right, no.
Okay.
Alan.
See, Lisa Marie, you just hit on something that I was deciding if I was going to even poke at for a minute, but you hit on it. And you hit directly on it, which I very much appreciate, because you tied your capital plan to your estimated useful lives and getting your assets to the end of their estimated useful lives, and knowing that you could do that. I worry, I guess it's a question. Do most governments, is their capital plan take into account estimated useful lives or condition? In other words, when you do a capital plan, you're saying, I got to get this road in its 40 years for life, or do you say, I got to keep this road in this condition so people can use it? And those aren't the same thing. And Lisa, you very much said yours is tied to get it to the end of the life, which is very different than how much do I need to spend to keep the potholes filled, which might not be about getting it to end of its useful life. That's more about condition.
Right. I mean, I will add that we're unique in that we're a separate water agency. And so we have a dedicated team to maintain and operate the system, unlike a city that has a whole host of competing sources. Even though they do have an enterprise fund, sometimes those funds still bleed in to fund the rest of the city. So I would say that a utility, and we're a joint powers authority, we do have a certain level of luxury, if that makes sense.
It does.
Thank you. Well, I think for the sake of time, we're going to move forward to our last question of the day, home stretch. It's kind of a larger, question. We're going to talk about the modified approach, right? The exposure draft retains the option of using the modified approach to report infrastructure assets with some minor modifications. For example, paragraph 8 proposes to remove language used in statement 34 that the board was concerned that some stakeholders might interpret the guidance to mean that an asset management system must perform certain requirements and not the governments and their processes themselves. Paragraph 13 of the exposure draft proposes that the RSI schedules already required by statement 34 to be presented for 10 reporting periods instead of 5, which the board believes is essential for placing such information in an appropriate historical context for these long-lived assets. Paragraph 20 acknowledges that the information for the 10 reporting periods to be presented as RSI may not be available initially, and so it provides that such information could be presented for as many years as are available. And then lastly, paragraph 14 of the exposure draft proposes that related notes to those RSI schedules disclose any changes in the condition levels in which a government intends to preserve its infrastructure assets reported using the modified approach. And the reasons for that change should be disclosed in notes to those RSI schedules. As the board believes that such information could be considered a factor that really affects trends in the information reported. And then paragraph 17C proposes transition guides would require this disclosure to be applied to the beginning of the reporting period in which this guidance is first implemented. So that gets us to our last question for the day, question 9, which broadly is, what feedback do you have about the proposals related to reporting infrastructure assets using the modified approach? And Stacy, if you wouldn't mind kicking us off.
All right. We appreciate the removal of disclosures that are deemed not useful or not needed anymore. So thank you for removing disclosures. We also, we agree with all of the disclosures related to modified approach to be transparent. We have a handful, maybe 6. It might be down to 5 governments that utilize modified approach in Washington state. So it's not a common item that we address accounting and reporting on or audit to, since so few people use it. So disclosures are great. Agree with the RSI component. 10 years is consistent with all other RSI schedules. We talked earlier about that policy disclosure. We really were liking it to be added to the notes to the RSI where this disclosure information sort of lives. So some policy information related to the maintenance plan and whatnot, putting it here would be great. So it's all in one place, but do understand putting it in the SSAP with other policies makes sense. And the final comment was explicitly stating that these are, which I think it might, but I had a lot of people comment, which is why it went into our letter this way, that it explicitly states that the RSI schedules are only for the modified approach. Again, I think it may say that, and there was just some confusion on our side. And that's all I have.
Thank you, Stacy. Cameron.
Thank you. So I will say the people that are on our committee, we did not have anybody that was using the modified approach. Me personally, we do not use the modified approach as well. So this question didn't really apply, and we just discussed it very briefly, but we did not have any opposition or anything to that.
Thank you, Cameron. We'll go up to the top of the order. Bill.
Yeah, I would concur with Stacy's comments. Again, it's not overly utilized. I think I have, I'm aware of one client that I've worked with over the years that uses modified, but the reduction in disclosures and looking for more valuable information is always a better approach. So thank you for that.
Thank you, Bill. Next up is Richard.
I think I covered the breadth of my comments on modified approach in the last time around, so I'll pass.
Thank you, Richard. Next up is Jody.
So we found ourselves in the same situation as the GFOA committee. We didn't have a lot of experience with clients using modified approach, so we didn't really have any comments on this. So I am thinking now, looking back to GASB 34 and when my clients implemented, why more governments didn't, choose the modified approach? It's really an interesting question, but we have no comments on it.
Thank you, Jody. Moving on to David.
The changes to modified approach, I think, the additions and subtractions seem reasonable. I think we have two comments on the modified approach writ large, and I think possibly partially answers why we don't see as much of it as maybe was anticipated. One limitation of the modified approach is you're only allowed to use it if you are, managing your assets to your target condition level. And I think kind of in the areas where we have data on, in our case, state government's performance of managing their transportation assets, for example, a lot of governments are falling short of their state of good repair targets and their funding needs. And so, under that kind of requirement, would not normally be allowed to report using the modified approach, right? You're not allowed to show, unlike say pensions, right, where you can show an unfunded liability. There's no process for saying, well, we're falling short and this is our gap. We anticipate we would like to catch up, but we have a modified approach funding shortfall. But then the other is, while you have this very strict requirement on what you need to be achieving to use a modified approach, you have a lot of flexibility for governments in terms of their condition targets. And we've certainly seen examples of states where kind of the modified approach, Act for Disclosure says everything's fine based on, I think, what would be arguably a pretty generous condition target they're trying to hit, whereas their own transportation asset management plan shows a shortfall. And obviously you can't reconcile that by having them say, okay, we're having a shortfall in the modified approach, because then they can't use it anymore. But it certainly takes away the information value if you can kind of set your own thresholds for what you're trying to achieve. So just like the conversation around historical costs, we're talking about how do you acknowledge the fact that in reality, state and local governments have the ability to extend the useful life of an asset. It's not, kind of depreciated and it's done, but we have the ability to replace components or kind of restate useful lives. I think having the ability to acknowledge that a state has, the asset management toolkits to assess the condition and its needs of its assets, but isn't currently funding at the adequate level, to have the capacity to show shortfalls there and hopefully then to show recovery. I think would make the modified approach a more useful way to understand assets, but also like a more accessible tool, because you're not running the risk of having to upend your accounting system because you're not adequately funding your assets.
Thank you, David. Next up is Lisa Marie.
Thank you, Joseph. I have no comments.
All right. And after Lisa Marie, I have Sean.
Thanks, Joe. We didn't get any comments back from APPA members that are using modified approach, but just say that we agree conceptually with the contents of the exposure draft related to the modified approach. Thank you.
Thanks, Sean. And then the last one up for this one would be Gary.
Yeah, I didn't have any comments on this one.
Okay. Well, then moving on to the back half of this topic, turn it back over to the participants. Would anyone like to follow up on what they've heard or add to their prior comments? And then seeing none, I'll also turn it over to the board if any of the board members wish to follow up on what they heard from the participants. And barring none, because...
Hey, Joe.
Yeah.
I guess I'll address David a little bit. It depends on what you mean by meet your targets, right? Because the existing modified approach requirement, you would only revert to depreciation if your condition levels aren't maintained at that. Whether you spent the right amount of money each year is indirectly might affect those condition assessments. But if that's short, but you still meet your condition assessments, you could still continue to use the modified approach. Now, all your comments about the government sets their own condition assessment, that's very valid. That is what the modified approach is. But I just depends on what you meant by kind of meet the targets. Condition, yes. Spending, at least not directly, maybe only indirectly. Just for everybody that might want to use the modified approach, because we've heard some positive comments about it. Wanted to be sure that was clear.
Yeah, and just to the it's falling short of condition targets, but I think Colorado is an example where they're doing modified approach for transportation. They then were no longer meeting their condition targets, and so moved away from it. And I think we think there's, if you got the underlying technical tools to do modified approach, we think it still tells you something valuable, and we'd have more to learn about Colorado's situation if they'd kept that up. And then on the setting the own targets, the specific example is their own target for their roads is no more than 5% poor in their asset management planning, but their ACFR target is no more than 30% poor condition, and they fall short of the one, but they meet the other. And I think we're not learning as much about their situation as we could if they had to actually target the targets that their own policy sets.
Indeed. Well, barring any other questions or other hands raised for question 9, before we let you go with the time that we have left, again, want to thank everyone for their participation today. Want to make sure we give time at the end here, in the time remaining. What other comments would you like to share with the board about the proposals in the exposure draft, if any? And I'd say for this, we'll just, we can go by show of hands, and I can, or, raise your hand and I'll call you and you can provide that. And first hand I see up is Stacy. So Stacy, we'll start with you.
Hope I'm not that one in school where you're all like, nobody raise your hand so we can get out early. Estimated useful life. I just would like to say, if the looking back to see if they're correct or not is extremely valuable. I can live with current period adjustment, but what if it's material? Like there's some level, like there's a massive amount that they have to fix that can actually be more of an error as opposed to a change in estimate, because they should have been doing it all along. But if it's not of a material or significant amount, current period I can live with that. I just think I would like to stress how vitally important it is that the estimated useful lives are evaluated and corrected, so that going forward, everything else in this standard is tied to those numbers being as up to date and accurate as possible. So if we don't get retro, I can live with that, but let's not get rid of the requirement to actually fix them, please. Thank you.
Cincy. Karen, you're up next.
Well, I thank you very much, everybody, for your time today. I do appreciate allowing us to make comments. The one kind of thing that I would like to just kind of overall mention would be the timing of this standard and when potentially it would come out and how much runway we are going to have for implementation. I again, as I alluded to a little while ago, I'm already me personally, I'm already getting started on looking at our system. We use SAP for our ERP system, which I think is a fairly robust one, but we are going to have to do a lot of work in there to start categorizing our getting our assets into networks, essentially. And I do feel like that is, and I'm taking the approach that, hey, let's start now as opposed to 2028 or whenever this is gonna 2029. I would ask that any time that you can give us, even if the standard's out, but you still give people a couple years for implementation, just because I think, and again, I'm starting now. I think other entities that don't even do anything until they see the actual standard come out, there's going to be a lot of heavy lifting for them. I think that giving people time will potentially maybe ease some of the I don't know, the negative feedback that you might get based on the timing or the burden that you're putting on people. Thank you.
Cameron. David, you are up next.
I think two things. First, I think these proposals are really going to improve the amount of information and the quality of information we have on all of the reporters using historical costs, which is the vast majority. And we're excited to get this information in the ACFRS and to have, as I said, a more complete perspective. The real success of this is going to be, is implementation smooth? And I think kind of the questions that the board is asking and kind of the discussion among the stakeholders is exactly the right questions you want to be asking if you are going to have a good and effective implementation. So I think it's been a great conversation. This wasn't kind of one of the questions we're tasked with, and I think kind of decisions already been made, but while we acknowledge that where reporting is and where the amount of information reporters have broadly accessible is not remotely near the point where you could say, here is a numerical liability for deferred maintenance that could be put in the ACFR. I still think we'd respectfully disagree that on the question of should the GASB affirmatively say that this is not a liability, just like with pensions and OPEB, where there's a long period where the reporting in the notes in the RSI was being strengthened, and the actual profession was strengthening their own practices, before it became kind of a liability in the financial reports. We acknowledge that there's a lot of room that still need, or progress that still need to be made, but I guess would still say that kind of affirmatively stating it's not a liability kind of doesn't match how we see things. So thank you all so much. This has been a great conversation.
Thank you, David. Next up is Bill.
I'll echo the thanks to everybody for their time and allowing us to provide feedback today. I would reiterate some of the discussion points from earlier. If and when possible, please provide examples and clarification, specifically in the area of network and components as well, for clarity's purposes. I'd reiterate the implementation timeline as well. That would be a concern based upon different level of governments. You've shown that flexibility in the past as a board, and I would ask and encourage you to do the same here. Consider the entities out there and the resources or potentially lack thereof to implement the standard. I think the standard will require, I don't think a lot of accountants are going to want to go back and look at lives and make determinations on that. So I think there's going to be third-party hiring to go do that assessment, or at least internal experts, if you will, using that somewhat loosely, to do that. So that would potentially be time-consuming and require additional resources. The most common feedback I got when I reached out to several people on this was just another standard that they see potentially viewing as a burden to them and costing them time and effort. And so again, just for the idea of giving that runway. One issue about the accounting and account coding, if you will, for the expenses associated with infrastructure assets. You're working on a taxonomy project. Maybe kind of look and incorporate that some way so that you gather that data from the detail side of things. Thank you.
Thank you, Bill. Lisa Marie.
Sorry about that. Good afternoon again. Thank you all. This has been a great, productive day for me. Very informative. And I would just like to echo the comments about providing comments, and then as well as the timeline for implementation, consideration of a phased approach, either by industry or larger agencies first. We really want to make sure that the smaller agencies have the resources to comply with this rule. Thank you.
Thank you, Lisa Marie. And it looks like the last hand we have up is Richard.
Thank you all as well. I would say this difficult job, I don't envy being in your position to have to come up and do this, but you say that would be something I would feel now, but in the long run, you should be very proud of yourself and the headway you make here. I think it's all about accountability. That's what we're trying to do. And to me, an accounting report, that's what it tries to do in every way, shape, form, or fashion. And I think it's always been, in the last 50 years, for me, a concern among the user community. And I'll take that to any of my, in both from the investment standpoint and credit quality, but also say, having served on a government in which I saw neglect. It was a problem there. And you always talk about from the point of view of government finance officers, which are terrific people and good job. They do a good job, but they sometimes have a different objective than maybe the elected official who needs objective answers in terms of how well he's doing, because they don't like to be surprised either. But I think that what we're trying to do here is we're trying to strive for being more accurate, being more precise. I think you have numbers in here that we've turned into a report on 2,000 cities that have actually done a good job of sizing cities up by population group, about implied condition, imputed condition, we call it. And it's an accounting measured imputed condition. And I'm quite willing to say that test will have some mistakes from time to time, but I think the mistakes are not due to us. They're due to the government's reporting the numbers. And the biggest cause of errors, you might say, in judgment on this from the way we've looked at it would be the fact is that governments have not taken full consideration of estimated useful life. And the fact is, if you're trying to improve that in any way, shape, or form or fashion, you're going to make us all better off. But I think the number you put in here, these are more than just paper items. These are economic spent items of capital assets. So I want to emphasize that this is not a futile vision. This is something that users will appreciate. And in the long run, in the age of data, I think you'll find that what you do here will be used in the future far more than you've ever envisioned. So we can be forward looking on this. We don't have to go back and correct all the numbers and get everybody afraid about. But I think the estimated useful life changes will help to do that own correction. I think the fact is the one thing that when I get questions and when I release the report more often than any other, how to size up deferred maintenance, and which has as David would have said here, is that has the greatest correlation with deferred maintenance. If it's deferred, that means that somebody's going to be paying soon, one way or the other. And I think that I can't get that number with what's provided today, but I can get a perception of who's more likely to have it. And that's, to me, satisfactory at this point in the game. To the point you can erase that and make it precise, terrific. The last thing I wanted to make is, it's hard to do this with infrastructure, but I will say that the problems of inconsistencies and lack of standardization and, are they just throwing a number at the wall or not, are even greater when you get into capital assets. And I think that task needs to be picked up at some point, maybe not while you're on the board, but down the road. It's a mess. I mean, the standardization of terminology, what's out there. I gave you the New York example of new construction and betterments, but there is a lot of them like that. You have no idea what kind of infrastructure or capital assets they're talking about. And that certainly is not a good way to do it if you're trying to do an evaluation. We can do better than that. And if you want to help to move in the right direction of making numbers consistent, make sure that the estimated useful life footnote just correlates with the statement of changes that you give on capital assets of what your additions and deletions were, because the categories don't match up. Some governments do, but most don't. And we should all be matching up. With that, I'll end, but I say that thank you for giving me the opportunity, to give us an opportunity to give an opinion on this, and to hopefully we made some suggestions that will help you move in the right direction. Thank you.
Thank you, Richard, and thank you, everybody. With that, I'm going to turn it back to Joel. I appreciate all your time today.
Thanks, Joe. And thanks again to the 9 of you. This was a tremendous discussion. I made a number of notes. Really appreciate your comment letters for those of you who provide them, but really appreciate this discussion and this dialogue. It's really helpful to hear back and forth. You guys have responded to each other, and that's really helpful information for the board to take in. So I think on behalf of the board and our team, really appreciate all the time you've taken to provide input and to participate in this public forum. With that, public forum can be adjourned. We do have one final public forum on this project, which is next week, Thursday, July 23rd at 1 p.m. Eastern Time for another virtual public forum. See everybody on the board and team there. And thanks again, everybody.
Thank you.
Thank you.
Thank you.